Good morning, everyone. This microphone is simply for show. This is for our online group. Can you guys hear me? No? Can you hear me? Okay. It is my pleasure to welcome our first presenter of the day. Ms. Stacy has taught accounting at Nicholls State University for over 14 years, including 5 years as a full-time instructor of accounting and 9 years as an adjunct faculty instructor. She also served as Nicholls Director of Internal Audit for 4 years and was a faculty advisor for the Beta Alpha Psi Honor Society. Stacy's work experience also includes business manager for St. Charles Parish School System for 4 years, assistant CFO for Pride Offshore for 3 years, and head accountant at Lafourche Parish School Board for 9 years. She's a certified public accountant and has been for 36 years. Her area of expertise includes governmental accounting, auditing, financial reporting and management, budget, fiscal policies, and internal controls. Please welcome Ms. Stacy Lejeune.
Good morning, everyone.
Good morning.
Can y'all hear me? It doesn't sound loud enough. It's on. Technical difficulties.
Talk loud, say test, test.
Test, test.
Better?
Good morning, everyone. I just wanted to follow up a few comments that Diane mentioned about the layout of the presentation. The title of the presentation is Basic Governmental Accounting, but as she said, it's a 14-week course for college students, so we're not going through that entire curriculum, but I am trying to bring up some things that would be useful for you no matter what level of government you're in, and no matter if you're working in the accounting department or not. Now, some of it may get accounting oriented, okay, and that's for the accounting people. So my point of that is we have a wide variety of an audience, so some things maybe will be a little too complex, some things you may think are too simple, but so we're going to try to have a medium ground one. And for the people still in their office, I like to start off with, and this is what I usually start off for my students, is a story about, well, the city of Detroit failure was fairly recent, but in the past I've been able to tell students about governments that get into financial distress for one reason or another. Because their question to me is always, why do we perform governmental accounting? Why is it different from accounting that we use in business organizations? So I always have to go through that answer. And one of the reasons is because governments are just like a business organization. We can't treat it like a business organization, but it is an organization that requires financial reporting so that the public can see and the boards can see how the government is doing. So what happened, anybody familiar with the city of Detroit situation? I mean, it's kind of a big deal. A few? Okay. Well, just to kind of give you a little bit of history about that, about the city of Detroit. In the 60s and 70s, Detroit was a booming economy. They had a very booming economy. They had their automobile manufacturing, and they had the music industry. It was the place to be for the music industry, and of course they had the auto manufacturing. Well, after the 70s, okay, when we had the big bust of the 80s, Detroit began a slow trickle downward because automobile manufacturing had started to change. And you probably remember there was a time where a lot of the manufacturing went outside of the country for automobiles. people in America started buying foreign automobiles from foreign manufacturers. So that affected Detroit because that was one of their major manufacturing, the major way they got taxed on their revenue, okay? Besides the music industry. Well, when the automobile industry went down, as I said, that affected people's jobs that were in Detroit, living there. So they started leaving, as they do, to go elsewhere to find work. But once you start losing your population, okay, when you start losing your population, the government starts losing its revenue because now there's no tax revenue if there's no population. So it went on for many, many years. They struggled. They tried to keep it together. There were many things that were tried. I don't know the whole extent of it, but I do know that in 2013, the decision was made for them to declare bankruptcy. And it was a big deal. It is a very big deal when a government declares bankruptcy. In fact, Detroit was one of the biggest U.S. municipal bankruptcies in history. What I have up here, you can't probably really see it that great, but there are some statistics about the failure of the government, and as you can see, $18 billion of liabilities, okay? That's hard to kind of wrap your head around. I mean, Detroit is a big city, but $18 billion in liabilities, and they didn't have the cash or the revenue streams to be able to pay for that. So what happened was, and it was sort of a unique thing, a government claiming bankruptcy, because there's a certain process for bankruptcy. Anyone can say they're going bankrupt, but there is a formal legal process that you have to go through for bankruptcy. You have to go through court proceedings and things like that. So it was a big deal. So the city realized that they would need someone to represent them in this process, and they decided on a new position, an emergency manager. His name was Kevin Orr, and for the next, they declared in July of 2013, and then by the next December of 2014, they were getting out of bankruptcy. So he helped them to go through the bankruptcy process through it for that 18 months, and then they finally stepped out of it in December of 2014. So that was seen as a successful thing because once they got through bankruptcy, then they could start the plan of action to start recovering. And what the bankruptcy did is that it helped them to shed about $7 billion of that $18 billion in debt. Okay, they were failing to make payments on their retirement systems for their employees. They were failing to make debt payments, and we all know how important that is for us to be able to even borrow money in the future, making those debt payments. So they were defaulting on a lot of those things. So hopefully, I don't know the current status of Detroit. I don't hear about it in the financial news anymore, so I'm assuming they're getting better and things are getting back on track. But that was a big deal in governmental accounting for a big city to declare bankruptcy. So you may say, okay, so why do we need to know about that? Okay, well, if it can happen to a big city like Detroit, or any big city in the country, it can happen to small city governments or smaller town governments. And one thing that occurred also is that the financial statements were maybe showing signs of distress, but I'm not sure if they weren't paying attention to it or if I know of no fraud. I want to make that clear. There was no fraudulent allegations about Detroit. Okay, it was all just a matter of the population leaving, them losing their revenue source. So then they couldn't make payments. Okay, well, the point of all that is having good financial reporting, having good financial statements that are clear to the readers of the financial statements, and they can be So we're going to go through those financial statements a little later to talk about them. But the whole point of that example is that it was a very big deal, and those numbers stick in people's minds and they remember. Okay, so again, I've used other examples, but Detroit is the latest one. All right, you're going to hear me use some terms, and one term that I'm going to use is GASB, okay? And GASB stands for the Governmental Accounting Standards Board. This is a body that is responsible for financial reporting of governments, okay? Their first statement that they ever issued, which GASB was developed and created around the early 1980s, I think it was 1984, and they're going to be the body that determines financial reporting for governments. In business organizations, they already had their body of authority that was determining accounting rules in regular businesses, okay? And that's called the FASB, the Financial Accounting Standards Board. But prior to the early 1980s, government didn't really have a board that they could look to say, this is how we have to prepare financial statements, this is how we have to record journal entries. We didn't have that prior. So the GASB became the authority on the accounting financial records. So they issued their first statement, and their first statement says, I'm going to just read this real quick. Governmental accountability is based on the belief that citizens have a right to know, a right to receive openly declared facts that may lead to public debate by citizens and their elected representatives. Financial reporting plays a major role in fulfilling the government's duty to be publicly accountable in a democratic society. So what they're saying here is the financial statements are going to help us in government relay the information about the government, the financial information, so that they can know how their tax dollars are being spent, what is the condition of the government, and that's why we have things like open meeting laws, we have public records requests. Citizens can request public records from us when they are interested in something or they're trying to find some information. They can make a public records request, and we have to comply with it, okay? If it's nothing legally protected as private, we have to comply with those things. And we also allow the public to comment on the budget. A lot of times governments, and maybe smaller governments, have a tendency to feel like when you've been working somewhere for a long period of time, you start to feel like you have ownership in the business, which would be government, and we sort of sometimes forget that the citizens are our customers, and we need to be accountable to them, and we need to be able to communicate with them and let them know and be open about all of our processes. And that will fulfill their right to know, the GASB statement number 1. Now, as you all know, just as an aside note, as you all probably know, when we have public comment times for budgets, how many people show up usually? Especially if you're a small government. I can see maybe in a larger government you're going to have more times where there's going to be people attending a budget meeting. In my years, the only time we've seen people show up to comment on a budget is when there was some hot button issue that the community was, had very strong feelings about. And of course today, in today's political climate, we might probably have some of that going on right now. But it is the public's right to know what's in our budget and what do our financial statements look like. Okay. So to be able to follow the GASB's rules about governmental financial reporting, we have to first know what is a government, okay? okay? And you might think that's so easy because we all know what our governments are. Well, the state, the federal, and local authorities, those are easy. But then you start having other types of organizations that can be considered government. So the FASB board, remember I said the FASB board is the one that is controlling or ruling business organizations' financial reporting. GASB is concerned with governments. So if GASB is going to follow what regular businesses do, we kind of have to be on the same page about who are we reporting for. So FASB and GASB decided on a definition of what is a government. And when I'm going to tell you a few of the ones that you maybe wouldn't think are governments, you'll see what I mean by it's not always obvious what is a government, okay? So it's an organization. FASB and GASB have agreed on this definition. Sorry. Organizations that have one or more of the following characteristics. Popular election of officers, okay? That's popular election of the officers of the government. Or the appointment by officials of one or more state or local governments. So if you have an organization where the governing body is appointed by officials of another government, then you are considered, that organization is considered a government. If the organization has the potential for dissolution, which means dissolving of it, by a government, and the net resources are going to that government, then the organization that's being dissolved was and is a government, okay? If the organization has the power to enact and enforce a tax levy, then that is a government, okay? The ability to directly issue debt that pays interest that is exempt from federal taxation. So what this means is if my organization can issue debt without having to go through a third party, okay, and it pays interest and we're allowed to offer that interest tax-free to whoever's going to buy the bonds, then that organization is a government. Okay, so these are very descriptive definitions of what is a government, and we need to know if we are a government to be able to follow the GASB rules. Okay, this slide is a little busy, but it's going back to our Louisiana legislative auditor. There is an audit law which says that agencies that have to report to the legislative auditor, they're divided into two categories, okay? So one is state agencies. So if you're a state agency, part of state government, then you have to abide by the audit law for the Louisiana legislative auditors. Everyone else other than in state agencies, departments, boards, and commissions that are included, those examples that I just gave, the state agencies, departments, boards, and commissions are all part of state government. So they report in with the governmental financial statements. But every other government within the state, other than state government, such as, and that's the ones I was going to name, and they're all on this list, but if you just listen to them. Retirement systems, colleges and universities, judicial districts, so that's your judges, police juries, we still call some of them police juries, or parish governing authorities. Those police juries is equivalent to your parish councils. School boards, special service districts, clerks of court, sheriffs, justices of the peace, municipalities. So municipalities are all your local smaller governments, okay, your local governments. City courts, so the court system is considered a government in Louisiana. Housing authorities, hospitals. So this is one that you might not necessarily think of, but a hospital, hospitals, there are some that are considered governments and are subject to the audit law. Finance authorities and similar trusts, and then quasi-public agencies, okay? So that's a list, a big list of what is considered governments in the state of Louisiana, and again, they are all ruled by the audit law, which means that they have to report to the legislative auditor, okay? And the legislative auditor's office is able to audit the records of those governments. Okay. So earlier I was speaking of how we have so many different types of organizations. We can count them down to 5 basic organization types. And the reason I'm going through this, like I said, is because sometimes when you're not always sure if something is a government or not. We have 5 types of business organizations. We have the federal government. They're on their own, okay? They're the federal government. So anything that is considered federal government, they are governed for financial reporting by something called the Federal Accounting Standards Advisory Board. Okay, so that's a bigger group. I'm not sure we have an acronym for how we say FASAB, but that's the Federal Accounting Standards Advisory Board for the federal government. So if you work for the federal government, whether you're living in Louisiana, your standard setting authority would be FASAB. We have state and local governments. Those are the units that I was just mostly talking about. State and local government, their standard setting authority for financial reporting is the GASB. We have investor-owned businesses. Those would be your public companies, okay? Companies, not necessarily public, but publicly and privately owned businesses. That is another type of organization. Their accounting, we call that the FASB, that guides their accounting. Then we have our not-for-profits, okay? Because sometimes people think, okay, if it's a not-for-profit, that means it's a government, or vice versa. If it's a government, it's not-for-profit. In this context, not-for-profit, because of course we're not trying to earn a profit in government, right? Public not-for-profits are those that arrive at their resources through the use of the public. And so that would be your big ones like the Red Cross, Salvation Army, United Way. Those are public not-for-profits. They are guided by the GASB, okay? So they're going to follow the same authority for financial statement reporting because they do report. They have annual financial reports, just like governments do. Private not-for-profits are those that are usually created by an individual or a family or a business that wants to do some good with their money, but they derive their money from themselves, okay? So they can decide how they want to use the funds, but it's usually for charitable work. Those organizations are going to follow the FASB. Okay, so if you work for a private not-for-profit, you would follow FASB rules for your governmental reporting and your governmental accounting. Okay, so federal government, FASAB, state and local government, the GASB, public not-for-profits, GASB, private not-for-profits, FASB, and investor-owned businesses, FASB. Okay. Again, students often ask, why can't we just do regular accounting for government? And I gave some of that in a few minutes ago, is that we're following a different set of rules for our governmental reporting. It's not really a different set of rules, it's some rules with some modifications from full accrual accounting. And the GASB attempted to answer this question. Why can't we just do our financial statements like a regular business? Well, first of all, do we earn net income? No, we don't. We're not in government to earn a profit. So that's one big thing. But GASB attempted to answer that question with these 5 differences that they see between government and businesses. The first one is organizational purposes, okay? So they exist for different purposes. And before I forget to tell you this, there was a white paper written by GASB that you can find on the GASB website. I have it right here. I thought I had an older copy because mine says revised September 2017, but I think when I went to look for an updated version, it's 2017. So it's about this thick, and there's all this information that I'm going to talk about is in here. So if you want a reference for some of this material, you can go to the GASB website for that. Okay, so one of the main differences between government and business is the purpose of the organization, okay? Of course, a business organization is in business, of course, to earn a profit. They are concentrating on the profit and getting the selling price of the stock. For publicly traded companies, they want that stock to rise, okay? So that's their goal. So is that the goal of government? Absolutely not. The goal of government is to enhance and maintain the well-being of our citizens. And we do that by providing public services. Now, these are public services that the public demands from us, okay? But it is our job to provide those services as efficiently and effectively as we can and sustainably. Meaning we're in this for the long haul in government. We need to make sure that our facilities can sustain what it is we're trying to provide to our citizens. Some services, public services, and you know these are probably obvious ones. Public safety, which is our law enforcement. Transportation, so if we have a transit system, a subway system, those are things that are expected by the public. Social services, our utilities, environmental safety. So those are some of the services that are expected by the public, and they expect the government to provide them. Again, it's our job in government to try to provide those services and goods efficiently, effectively, and sustainably. And earning net income is not the primary goal in government. So that was the first difference between government and business. We have different sources of revenue, okay? Our sources of revenue are different from a business. In government, how do we get our main revenue? Taxes. Taxes is how we get our main revenue, okay? And does a citizen have a say in that matter? Well, yes, they do have a say in deciding, but do they have a say in whether they're going to be taxed or not for the government? But I'm saying if we expect government services, we're going to get taxed. So there is really no decision about that, okay? How much taxes we pay, and if we want to increase them or decrease them, that is a decision that we can make. But taxation is necessary for government to be able to fulfill their obligations. So sources of revenue for government, mostly taxes. What else? I didn't hear. User fees. If we have some governmental units that sort of act like a business, like your water plant, they're charged, citizens are charged services for that. Now, it might not cover the entire, most times it doesn't, cover the entire amount of what the water treatment plant actually costs, but they are charged a service fee or a user fee. We get user fees from citizens, we get taxes. What other things do we get revenue from in government? I can't hear. I didn't hear. How about grants? If you're in public education, you get a lot of grants from the state to do different things, the MFP being one of the main things, okay? Grants are things that are not expected to be paid back, okay? There are some kinds of revenue that are expected to be paid back, but a grant is not one of those. So we get grants from other governments. We can get a grant from private individuals. Sometimes a private individual wants to make a donation to the government for a particular reason. So taxes, service charges, user fees, and donations. Okay, so that is our main source of revenue in government. And of course, for a business, it's the sale of their good or service is how they earn their revenue. Now, in government, we have the potential for longevity. That's an issue with government versus business organizations. Business organizations know that if they don't run the business properly, okay, that there's a chance that they're not going to exist after a certain period of time if it gets run improperly. Governments are always going to be around, okay? As long as we have the power to tax, governments will always be around, okay? So that is one difference. And the reason we're going through these differences is because that determines how we prepare our financial statements. We want to prepare our financial statements with these things in mind, okay, for governments. How about our relationship with our shareholders? What is our relationship with our shareholders? Our shareholders are our citizens. Our relationship with them is that we are providing the services, okay? And they expect them to be ongoing. They don't want their water cut off after, 6 months. They expect their services to continue being provided. So they expect that ongoing. What is the relationship with a regular business's stakeholders? What is their relationship with their shareholders? Their goal is to make as much money as they can to provide a return to their owners, okay? And then finally, one of the biggest differences is the role of the budget. So that's another way that business organizations are different from government. The role of the budget. A lot of times we don't realize this, but the budget has legal significance, okay? It has legal significance, meaning there can be legal repercussions if something is done improperly. So not necessarily just somebody making a mistake. There can be legal consequences. It is also a legal thing to provide a budget. Okay, that's a legal thing to provide a budget to the public. It's an expression. The budget is an expression of our public policies. It's what the citizens want. So that's why they have a say-so in the budget, and that's why we allow them to come and have a say-so in the budget. We allow them public comment. Now, one other thing that while we're mentioning the budget is that in Louisiana, and for GASB purposes pretty much, we have to prepare a budget to actual report, okay, at the end of each year. The individual government should have a check on the budget more often than that, but for our financial statements, we have to prepare a budget to actual report, which shows this was our budget, okay, this is what we expected to happen, and then a column says this is what actually happened. And you're going to have some differences there, okay? Because we can't always predict everything with certainty. We can sort of make some judgments based on our past experience, but we can't always, and most likely not, budget with 100% certainty. So there are going to be some differences in the budget compared to the actual. And those are the things that most citizens are going to ask about, okay? When the financial statements are prepared, or when we're having our monthly meeting or monthly budget meeting, if citizens attend that, if they attend, that'll be one of their questions, is they're going to zone in on, okay, we budgeted this much in revenue, but we actually collected a lesser amount. Well, somebody's going to ask, and of course the head of the government also is going to want to know that answer. Why didn't we collect everything that we expected? They're also going to ask, why did we expect to spend a certain amount and we're spending more than that? So those are the questions that the budget will show, the budget to actual report will show. And again, it's a very important statement. And I'm not sure about the statistic, but is it 5% if we go over a budget? Okay. If we go over or under, I think, budget of more than 5%, okay, or we cannot in Louisiana, okay? Over, or if we go, yeah. Sorry. So did everybody hear that? If we see that we're going to go over or under our budget by more than 5%, a budget amendment has to be done, and then you have an amended budget. Okay. So I don't know that that's the rule in every state or not. Okay. Okay. And again, your budget to actual comparison is going to be part of, we have a new acronym for the annual comprehensive financial report. It's called, we say ACFR because it's ACFR, but that budget to actual report is going to be in the ACFR, which is your final report for the year. Okay. Okay. So in governmental accounting, we have, this is what GASB has decided, okay? We're going to talk about 11 different types of funds. So there are 11 main categories of funds. If you look at a set of governmental financial statements, you're going to see all these different fund types, okay? Because the funds are going to each have their own individual income statement and their own individual balance sheet. But then we're also, that's another question students ask, why do we have to have two sets of financial statements? And I'm getting there. The other set of financial statements is your government-wide financial statements. So you're going to see a set of government-wide statements that encompasses the entire government, except for fiduciary funds. And then you're going to see a set of financial statements that show each individual's fund's financial statements. So we're going to see how each fund does as far as their I'm calling it income statement, but income statement and their balance sheet. Okay, you're going to see that for individual funds, but then they're going to be combined into a government-wide statement. And part of the reason, I think I'm getting ahead of myself, but part of the reason for that is, and that's why I also showed the Detroit example, is because prior to the 1990s, we had some governments, again, going out of business and declaring bankruptcy. And one that I remember distinctly is Orange County. At the time, I was young at the time, and I don't recall if it was Orange County. I think there's an Orange County in Florida, and I think there's an Orange County in California. I think it was California, but they had declared they were in financial distress. I don't recall if they definitely declared bankruptcy. But what came from that, because it was a big shock, okay, because again, this was in the 90s, early 90s. It was a big shock because I don't know if a government had really ever gone bankrupt before that. So we to the government community, and what was decided at that time is that we're not going to just have fund financial statements, because now you can't see, because this is what had happened in Orange County. Prior to how we report now with a set of government-wide and each individual fund, prior to this, we would just had fund accounting. Just each fund had its own, again, income statement and balance sheet. Well, if you think about that, well, that's good for each individual fund to know that, but what if you're trying to find out something about the government itself as a whole? You'd have to add up the cash balance for every fund to know how much cash was actually the government had, okay? Because you're dividing it by funds, so you have all this scattered information. So at that time, it was decided, the GASB decided, we're now going to prepare a set of fund financial statements so that we can see how each fund is doing, but now we're going to have a government-wide set that shows us how the overall government is doing. And again, that was directly a result of what happened in Orange County. Okay. So besides all of that, okay, as far as financial reporting, we use, in governmental accounting, we use two different accounting methods. And the reason for that is we have three different types of funds, okay? Some of them are going to use modified accrual accounting, and some of them are going to use full accrual accounting. Full accrual accounting is the method that we use in business organizations, okay? That's what we do in businesses that are operating at a profit or wanting to show their profit. Governments, they cannot, because of the reasons we said before, those 5 reasons, why is government different from regular business organizations, they cannot use full accrual basis accounting in certain situations. So, and then students get confused with this too. When we say modified accrual, it doesn't mean we're changing something from what is the rule. It just means that we're following a different accounting method for certain funds. And we're going to get into the different types of funds, but for now, the accounting methods we use are modified accrual, and that's for our governmental funds. You can see that on this slide. The governmental funds use modified accrual basis of accounting, and their focus, those funds' focus is the current focus. In other words, that fund, if it's a governmental fund, they're operating on a current focus. In other words, we're concerned with the current, okay? And current is usually meant the current fiscal year. We need to make sure we have enough revenue to cover our expenditures for this year. Okay, so that's the current focus. Some funds are going to have longer than a current focus. For example, proprietary funds. Proprietary funds are those that act business-like. So that would be like your water plant. The ones mostly that you charge usage fees for, those types of funds. Those are more run like a business, so they have the economic focus. So governmental funds, and I'm going to tell you which ones are governmental as soon as we finish this. Governmental funds use the modified accrual basis of accounting with a current financial resource focus, meaning, again, we're concerned with the current year. Proprietary funds use the full accrual method of accounting, and they have an economic resource focus, which means longer term, not just the current upcoming year. They have a longer term consideration and focus. Fiduciary funds, which the word fiduciary, if you're not familiar, means you are responsible for someone else's funds, and you have the responsibility to ensure that those funds are protected. Okay, that's what fiduciary means. So governments sometimes have fiduciary funds. They are also a long-term basis, so they have the economic resources focus, and they use the accrual basis of accounting. Okay, so if you want to say it maybe in a shorter way, proprietary funds and fiduciary funds use the accrual accounting that regular businesses use. Okay, governmental funds use the modified basis of accounting, which is our GASB rules that we follow for our governmental funds. Okay, let's get through the governmental funds. That's your next two slides, and then we'll take a break.
Federal grants be considered fiduciary funds?
Okay, not fiduciary in the fact that because we're holding on to, if it's a grant, is that what you said?
Yes.
Federal grant? A grant means they're giving you this money. They might expect you to spend it a certain way, but it is your money. Fiduciary means we're holding funds for someone else, and I'll explain that a little bit. So the general fund. Everybody knows about the general fund. That's basically where, if you can't find another place to account for it, it happens in the general fund. Okay, the general fund is a variety of activity. It accounts for our most basic services. This is my term, catch-all. Oh, sorry. This is my term, the catch-all fund, okay? So basically, if we can't find any other fund where this would be accounted for, we handle it in the general fund. And something important, and I think people still don't realize this, we can only have one general fund, okay? We can't have more than one general fund, okay? Capital projects funds are some more governmental funds, and they account for our capital outlay. Okay, so they're going to be in a separate set of funds, but they are considered governmental funds. So again, we're concentrating on the current. Okay, so if we have a capital project, we're worrying about making sure we have enough funds coming in this year to cover the expenditures that we're going to run into in the capital projects fund. And expenditures for capital outlay, except those constructed by proprietary funds. Proprietary funds are those that act business-like. Again, I'm going to keep using the water plant example, okay, where we charge user fees. Those funds are going to handle their own capital outlay. So when we need to build a new water plant, or we need to make some additions to it, or what have you, that's going to be handled in the water plant fund. It's going to take care of its own capital outlay. But for everything else, so let's say the main office of the government needs a new roof, okay, and it's the main office where the business people are housed. That would be handled in a capital projects fund. I see some questioning looks. Any questions? No? Okay. Debt service funds are those that account for the expenditures of principal and interest, payment on debt, except for the proprietary and fiduciary funds. Okay, so in other words, again, the proprietary funds, the water plant, it's going to handle its own bond, principal, and interest payments. It won't be handled in the debt service fund. Okay. We actually have 11 different fund types, but 5 of them are called governmental funds. So we just went through 3 of them: the general fund, capital projects, debt service. The final 2 of the governmental funds are our special revenue funds and the permanent funds. Special revenue funds account for specific revenue that are for a specified purpose other than debt service or capital projects. For example, federal and state grants, private donations, or restricted tax revenue are handled in a special revenue fund. So if you have a tax that's for a particular purpose, the handling of that fund should be in a special revenue fund, okay? And so that's mostly all of your grants. State and federal grants go there in the special revenue fund. And then finally, the fifth one of the governmental funds is called your permanent funds. That's where a permanent fund is where we have some revenue and it's restricted for its use that was given to us by someone that says, okay, I'm going to give you $2 million. I have $2 million and I'm going to give you $2 million for this particular purpose. I'm going to donate it to the government for this particular purpose. But if I say, so in that case, $2 million given from a private source would be handled in the special revenue fund if they don't put any restrictions other than to say how to, what they want it spent on, okay? If they say how they want it spent and they don't say you have to hold on to $1 million of it and just use the interest, then it's a special revenue fund. But if they give $2 million and say, I want you to hold, you can hold $1 million and invest it, but the rest of it you can use how you want. The part of that has to be held, it's called the corpus, and that's what permanent funds are, okay? We're using the earnings, not the principal amount that was donated to us.
Is that like a foundation?
A
Scholarship foundation?
A foundation, usually, yes, thank you. For universities, scholarship foundations, yes. But foundations are separate from the government. It's actually another body handling that, yeah. Yes.
Quasi-governmental?
I'm sorry?
Would that be quasi-governmental foundation?
I am not sure about that. There's a lot of different kinds of foundations. Does anybody? That's what I thought. I mean, I don't know if it, he's asking if it's a quasi-government. Would be a foundation.
It would probably be a general.
Okay. You heard.
What did she say?
It would probably,
Catch me out.
at the break. Okay, so quickly to review these last two slides. Our governmental funds, we have 5 types. The governmental funds are based on a current focus. In other words, currently we're focused on the current year. They use modified accrual accounting. And again, that means students think that that's a whole nother type of accounting, because we have many different types of accounting. We have tax accounting, we have all these other different types of accounting, so they think, okay, we have to learn a whole nother accounting. No. Modified accrual means you use the accrual basis of accounting except in these certain circumstances, okay? So the governmental funds are handled on the modified accrual basis. General fund can only have one. Capital projects funds account for capital outlay. Debt service funds are only for the principal and interest payments on debt. Special revenue funds are for revenues that are for a specified purpose. And then the permanent funds is a governmental fund where we have to keep the principal, intact, And any earnings we make off of that investment is what we can spend for the purpose that this citizen donated the money in the first place. Okay. We'll continue on with the different fund types. Again, 11 different fund types. We just covered 5 of them with the governmental funds. So we have 6 more left, okay? The next category of funds is called our proprietary funds. And I have the word business-like up there because these are our funds that we're using something that can act like a business, charging user services for, okay? And in that category of proprietary funds, we have 2 different accounts. One is called enterprise funds, and those that they account for revenues that are derived mostly from sales and services charged to the parties external to the government, okay? So if the government owns their utilities and they're charging citizens for the water or whatever utility it is, that would be an enterprise fund. It should be treated as a business as far as the fund that it goes in. And the fund that it goes in is an enterprise fund, which is a proprietary fund. Therefore, we're going to use the economic focus, not just the current year's focus. We're thinking longer term because this is a long-term asset, okay, that we own. And the accounting for it is the full accrual accounting, the accrual accounting method, okay. Utilities, airports, the public swimming pools, transit systems. Let's see. If a parking lot, okay, some cities own their own parking lots and they charge people to park. So those kinds of things are considered proprietary funds, and they use full accrual accounting. Another type of proprietary fund is something called an internal service fund. What that means is the word internal, okay? We're doing business with ourselves. Some examples of this are motor pools, print shops, self-insurance funds. What that means is we have our government and it's divided up into all these different funds, okay? So let's say, for example, workers' comp insurance or health insurance for our employees. The government itself is going to want to, you're not going to want every fund to go out and find their own health insurance for their employees that work in that fund, okay? You want to get a better price, you want to cover all your employees, so the head of the government is going to go out and try to get bids for the best price for health insurance for its employees, okay? But the general fund is not going to be the one picking up the tab for all of that. Everywhere we have employees working, whatever fund it's in, that's who's going to be responsible for the cost of that employee's health insurance, the part that the government pays. So internal service is sort of where we're doing business with ourselves. So in other words, the general fund would be responsible for buying the big health insurance policy, and then they would turn around and charge each fund and say, this is your share, this is your share, this is your share for your employees. So the cash basically is just going from the general fund, it's going from the different funds to the general fund. And the general fund is just recouping what they paid out for the whole $2 million cost or whatever it was. So internal service is sort of like we're doing business with ourselves. The general fund's going to be responsible for getting that big policy, but then they're going to turn around and say, okay, water plant fund, you have 5 employees, this is the cost of their health insurance per month. So you owe that back to the general fund. Okay, so that's what internal service means. So what should be the net effect between the funds should be 0, okay? Except for the general funds. Each fund's going to have their own cost, okay? But the net effect between the funds should be zero, okay? So it's just a better record keeping, and also it allows governments to get better prices on large dollar items by putting it out there for the whole government, as opposed to the different funds go and try to each get their own insurance. And that just makes sense. Okay. Motor pools, that would just be car pools where the government owns a fleet of vehicles and everybody uses the vehicle to go drive wherever. Whoever owns the vehicle, what fund paid for those vehicles, can charge back the other funds. Let's say general fund purchased 10 vehicles, okay? Mostly the general fund employees use it, but some of the special revenue funds like special education, any other fund other than general might need the use of those vehicles. So the general fund's going to have to charge a usage fee for those vehicles so that they can recoup some of their cash from the different funds that they paid, because they paid for the vehicles. Okay. A print shop. I was in my local parish when we decided to do this. If this was a long time ago, but which do we even print anything anymore? But the case was, instead of each school and each fund printing out their own documents, and have one print shop where we're going to pay a printer, and then we're going to buy the equipment in the general fund, but then we're going to charge each fund for their use of the copier machine and the supplies. So that's another internal service fund. So insurance, motor pools, print shops, those are just 3 examples of things that get reimbursed. And the main reason that is, it makes sense to do it at a bigger level and then just charge the funds for their share of the use of whatever it is we're consolidating. So internal service funds and enterprise funds are both business-like, okay? So they are going to use the accrual accounting method with an economic focus. Okay, so our 5, just to review again, our 5 governmental types are our general fund, first of all, capital projects, debt service, special revenue funds, and then your permanent funds. And now we have 2 proprietary funds, which are the enterprise funds. Again, those are funds that charge for their services outside of the government. Mostly outside of the government, okay? Internal service funds is where the general fund becomes the collector and the other funds are the payer, so it's more internal, okay? So those are your proprietary funds and those are business-like. So again, those use the accrual accounting method with an economic focus. So we have 4 more fund types to talk about, and those are the fiduciary funds. Now, I stated earlier in the government-wide financial statements, because remember we have 2 sets of statements, the fund statements and then the government-wide statements. Fiduciary funds are not shown in the government-wide statement, and the reason that is because it's not our money. We're holding it for someone else. We have 4 different types. We have pension trust funds. This accounts for the pension and any other employee benefits where the governmental unit is the trustee. We have investment trust funds. They account for the external portion of investment pools that are reported by the sponsoring government. We have a private purpose trust fund, where this accounts for any other trust arrangements where principal and interest may benefit individuals, private organizations, other governments. So an example for this is college scholarships. Okay, that's a private purpose trust. The money is being given to the college, so they're in the fiduciary capacity, but it's for use of individuals, okay? So the individual students. It's not for use of the government, the college as a whole. It's for individual students. So that's a private purpose trust fund. And then this is fairly new. If you look at old financial statements and you see the word agency, this just recently got changed by the FASB. The custodial funds are funds where our government is acting as a collection agent to collect and disperse taxes, okay? It's now called custodial funds. So if you look at old statements, you might see the word agency, but they're now called custodial funds. And I'm just guessing at this, but I'm guessing that this was the reason for that. The word agent in law means something very specific in a law terms. The word agent means something very specific. So I'm just guessing that that's why we changed it to custodial funds. Again, all the fiduciary funds are funds for others that we're holding on to. Okay. The custodial funds, and this is common across the state, okay, that's for situations where the government collects and disperses taxes for other taxing units within the parish. So sales tax and property taxes. Most of our, that's pretty much throughout the state. Our sheriff is going to collect the property taxes, and then our sales taxes in Lafourche, that's handled by the school board system. I don't know if that's how it is everywhere, but in Lafourche, the school board is handling the collection of sales taxes and the disbursement of those taxes. The sheriff is handling the collection of the property taxes. And now we know the assessor is involved in that process, but it's the sheriff that actually collects the money. Okay, maybe different in other parishes, but that's the common theme. Okay, so now we've talked about 11 different types of funds. So you can imagine that's just 11 different types, okay? If you start opening funds for every single situation that arises in the government, you're going to be having a lot of funds, and some of you probably do already have a lot of funds, okay? So if you kind of keep it in the context of, okay, those 11 categories, you know, this is my category of governmental funds. This is my category of debt service funds. This is my category of capital projects funds. If you keep them kind of in those 11 categories, it doesn't seem as overwhelming as when you're looking at 250 funds, you know, on sheets of paper. How many funds are required? Okay, well, definitely the general fund is one, for sure, but the GASB has their opinion on that also. And it states that governmental units should establish and maintain those funds required by law, because some funds are required by law. It's not just our decision where we want to put it. Some of them are required by law. And sound financial administration. So that is sort of giving the governmental units some leeway in deciding, you know, how many funds to maintain. If you don't want your books to get too cluttered, if you're a smaller government and you don't want your books to get too cluttered with 100 funds, you certainly can combine some of the funds that are alike in one set of account numbers, but you need to make sure that there's a way that you can clearly discern in that of which money went to which fund, okay, which money is for which fund. So as long as you can clearly show the revenues and the expenditures of each different fund, you don't have to necessarily open up another fund every time you get new money for something, okay? So again, leaving it up to the governments. And they're saying because unnecessary funds result in inflexibility, undue complexity, and inefficient financial administration. Yes.
So let's say you get a grant and it's sizable, it's $5 million. and you want to make sure that from an accounting perspective, because you may have to report back, either to the grantor, right, or taxpayers, you know, if that were categorical in nature or restricted, how would you recommend then best approaching that within your ERP system?
Okay, if
you didn't understand the question, maybe I didn't.
I'm sorry, say that again.
Right. Okay, so let's say you get a grant and it's $5 million.
Uh-huh.
And you're, hello?
No, that's for the, that's okay. That's for
Is
the
it on?
online. It's on.
That's so our online listeners can hear the question.
Can you hear me now? No.
No, online. It's okay. Just speak loud. Stacy's gonna.
Okay, so my first question is, why did the Philadelphia Eagles lose the Super Bowl? Oh, sorry. Okay. My question
I can't answer
is,
that one.
I'm not supposed to have a sense of humor anymore, so don't get me in trouble. So-
No accountants are
so I
supposed
know
to
my
have
director
senses of
of
humor.
finance is listening in on this. So let's say you get a $5 million grant, and it's for specific programmatic
Mm-hmm.
efforts. And you want to make sure that you set up the front end of your ERP system,
Mm-hmm.
right? To make sure that in the event you need to produce a report either for the grantor
Mm-hmm.
or internally, or you're making a presentation
Mm-hmm.
to the city government or whatever, how would you recommend that gets set up?
If it's a lot of money,
Five.
first you have to check if it's required by law, because if it's something that is required by law, then yes, you have to set up a separate fund, okay? If not, then you have the option of, you don't have to open up a whole nother set of account numbers if you can account for it in a similar type fund, but you might just use different,
Mnemonic code.
yes. You would, in special education does that a lot. Because they have so many different types of grants, they use a little code on the end, that last set of numbers to specify for certain grants. And then that's how they run the report, based on that last number.
I'm not an accountant by training.
The way to be 100% clear would be a separate fund. But again, when you start getting into lots of funds and, you know.
A separate little mnemonic identifier at the end.
Yes,
Okay.
yes.
Thank you so
If your accounting system allows for, if you have a set of digits
Yeah.
that you
Thank
have.
so much.
Okay?
Sorry.
Okay. So again, it's sort of a judgment, unless it's required by law to open a separate fund, it's sort of your judgment. Okay, I know this sounds like a repeat, but the modified accrual, now we're talking about the accounting method, okay? Modified accrual means, again, accrual accounting modified. So it doesn't mean a whole nother set of accounting. So kind of, if you're in doubt on how to handle something, and you can't find any literature that says how to do the modified accrual, the go-to is always you use the accrual method, okay? But then if you find out that there's a modification, then you just handle the modification. And that's what modified accrual accounting means. Our normal, regular accounting, accrual accounting with some modifications. Modified accrual accounting is used by governmental funds, and there is a current focus. I know I've said that many times, but the governmental funds have a current focus. So therefore, that's why I have that next bullet point. Therefore, on governmental funds financial statements, you're not going to see any long-term assets or long-term liabilities. Okay? Those types of things are not run through governmental funds. Revenue is recorded when it's measurable and when it's available. So that's something different than accrual accounting, okay? Accrual accounting means we record the revenue when the money has been earned, when we have earned it. Modified accrual says recorded when it's measurable, which means you can calculate it, okay? And if you think about property taxes, when it can be calculated, or when it's levied, that means that all the calculations have been done. So that would satisfy measurable. And then available. Available has been defined to mean available for the current year. In other words, we can count revenue for the current year if it's expected to be collected within the 60 days after the year end, okay? So property tax revenue is considered available in the current year if it's expected to be received within 60 days after year end, okay? So that means if your year ends 12/31, but you expect to collect some more sales tax revenue until February 28th, within that 60 days, 59 days, then you can count it as revenue for your current year that you're working on, December. Okay, so it can be counted as revenue if it's expected to be collected within the next, that's what available is determined to mean. Okay. Now, speaking of property tax revenue, if you have, it causes a little more issue with governments that have a January to December fiscal year, because the property tax process starts around November, okay? Then we get the bills in December, and then you start collecting, but then it goes on into January, February, and March. So if you have a January through December fiscal year, you've got to pay attention to this. Okay, 60 days after year end, I can still count this as property tax revenue for last year. Those that have the July to June fiscal year, it's not as big of a deal, because by the time our year ends the next June 30th, we've collected the majority of our taxes already in cash. There may be a small amount still left, but so it's not as big for those to worry about, okay? So if you have a January through December fiscal year, you just need to pay attention, because there could be some revenue that you could be counting in that year from property taxes. Okay. Expenditures, and I highlighted that word expenditures because we don't call them expenses, okay? In the governmental funds, they are called expenditures. Even though we have a tendency to say the word expenses, it's called expenditures. So that's how you're going to see it on those funds financial statements, expenditures. And they are recorded when the liability has been incurred, okay? So when a liability is incurred, which means when it happens, okay, when a liability comes about, in other words, we have something that we have to pay for, when a liability comes about, that's when you record the expenditure. There is an exception to that in the governmental funds, and that's with debt service payments. Debt service payments of principal and interest are recorded when they're due. So in full accounting, full accrual accounting, we match our expenditures of principal and interest on debt at the time, like as time passes, okay? So like 4 months have passed, so this is how much interest we need to accrue for. In modified accrual accounting, we say that you record the principal expenditure and the interest expenditure when that bill is due. Okay. So if it's due on July 31st, okay, that's when you can record the expenditure. Even if you don't pay it till a couple of weeks later. You put the expenditure in when it is due. Okay. Now, if it's within 30 days of year end, you can accrue it. Okay. But the big thing there is, because interest expenditure payments can be very large, like in the millions of dollars, because that would make a difference in the financial statements. You can, if let's say an interest payment is due, let's say it's due July 5th, okay? It's due July 5th. Our financial statements cut off at June 30th for that year. Since July 5th is within that 30 days of year end, we can say that that interest can go into the previous fiscal year, okay? All right. The important thing about that is you need to make sure, again, because it's a big expenditure, you need to make sure what budget year you put that interest payment in, because otherwise, if you put your that interest payment in one budget year, but you actually record it as an expenditure in the next fiscal year, when you're going to do your budget to actual report, you're going to have a big variance. Okay, so you just make sure at the year end that you're putting it in the year that you budgeted it for. Okay, so you don't have that big variance. Okay, so that was modified accrual. Again, just modifications to our regular accounting rules. So here are accounting rules. Forget about doing that. Okay, so the accrual accounting, just to refresh again, and I know it seems, I keep saying that over and over, but until you got to get it, you know, to learn the rest, you have to kind of have that in your mind. Proprietary funds and fiduciary funds use full accrual accounting, so they operate on what regular businesses use for their accounting records. You're going to see long-term assets and long-term liabilities in these funds' financial statements, like the property, plant, and equipment, and bonds payable. You're going to see those accounts in the proprietary funds and fiduciary funds. Revenue is recorded when it has been earned. So in regular business, when a product is sold, that's when the company earns sales revenue. When they provide a service, that's when they record service revenue. Expenses are recorded when an asset is used to help create revenue. So inventory, when we use up our inventory, when we pay our employees, when we use up our prepaid items. Prepaid items are things that we pay for in advance, but we don't use them up right away. They get used up over time. Okay? So this is a basic of the accrual accounting method. Okay? So again, it has an economic focus, which means longer term than just the current year. So therefore, you're going to see long-term assets and liabilities on their financial statements. And again, the big two, capital assets and bonds payable, are the two big long-term assets and liabilities. Okay, it's time for a quiz. Under modified accrual accounting, expenditures are recorded when the liability is incurred. However, there is one exception to that, and it has to do with the debt service fund. Do y'all remember what the exception is? It is recorded when it is due, okay? So the debt service fund exception to that modified accrual, to that expenditure rule about being recorded when the liability is incurred is an exception for debt service fund. The interest and principal payments get recorded when they are due. When is property tax revenue considered available to record for the current fiscal year? Within 60 days of year end. Okay. Now, I didn't really speak about this one, but I'm going to tell y'all the answer. The use of internal service funds are required by GASB, and that is false, okay? The GASB does not require us to use internal service funds, because remember what internal service funds are. It's all our different funds are doing business with each other within our whole big government. So as long as we can keep track of that activity in the different accounts that we already have set up, we don't have to set up another internal service fund. Someone was asking that. You don't have to set up another internal service fund just to keep track of the activity between the two funds, if you can keep track of it in the records. So no, it is not required. The use of internal service funds is not required by GASB. Okay, we have some more tests. Okay. I have a little thing that just says, which fund is it? Now, some of them is going to be more than one fund, but just think about it. I'll just give you a minute to think about it as I call it out, and just see what you think type of fund based on the definition. I mean, based on the sentence that's there, what kind of fund should it be accounted for in? A city issued bonds to finance the construction of a new jail. Capital projects, okay, would be one of them. What else? Debt service, right. So here you have the capital projects fund and the debt service fund kind of working hand in hand with that construction of a new jail. So the debt service fund would account for the principal and interest payments, and then the capital projects fund would account for all the expenditures of building the new jail.
What about the bonds, issuing bonds?
That's the debt service fund. That would account for the payment of the principal and interest on the bonds. That's going to pay for the construction. Yeah. So you're dealing with two funds here, the debt service and capital projects. B, a tax of $1.25 per phone number is collected by a city government from the phone company. This is required by state law for the 911 emergency phone system. I hear special revenue and what else? I can't hear you. Enterprise funds. I hear enterprise funds and I hear special revenue fund. General fund, I heard general fund. The technically correct answer is special revenue funds, okay? This is money that is restricted to be spent on the 911 emergency phone system. I'm trying to think of a way enterprise funds would apply to that, maybe. The taxes collected from the government is collected by a city from the phone company. Okay, so this is a special, it would be special revenue. C, a parish government expanded the water treatment plant for $1 million. That would be enterprise, okay? The water treatment plant, that's our water system. That is treated as an enterprise fund, again, business-like. And mostly charging user fees to outsiders, not to the government, to the customers, okay, our citizens. D, a donor provided $30,000 to the public library for the purpose of newspaper and magazine subscriptions. So we have a good citizen who's deciding to give the library $30,000, but they want it spent on newspaper and magazine subscriptions. That would be special revenue again, okay? It's restricted for a particular purpose.
Right.
I'm sorry?
Right.
Yes, in writing. We had a discussion at the break about getting those restrictions in writing. E, a donor provided investments totaling $5 million to create an endowment. And with an endowment, I'm in a university environment, so we use endowments. That is just a certain amount of money is going to be set aside, and you're going to spend the earnings on that money, whereby the earnings will be used to provide scholarships. Okay, this, first of all, I'm sorry? Okay, I'm getting all kind of different answers. It's actually a private purpose trust, okay? Private purpose, that kind of gives it away when it says used to provide scholarships. So that means this money is going to be used for individuals. We're not spending it on the government. This is spent on individuals. So right there, that means private purpose, okay? And it's a trust. So what we're doing is holding the money and distributing, just like we would be doing for our taxes, for the taxes and our property taxes and sales taxes, okay? So we're holding this money in trust for others. It's a private purpose trust because it's not for a governmental purpose. Someone has given this money for a particular purpose. F, a parish government sold surplus street maintenance trucks for $10,000. You're selling trucks. You're selling trucks. What did I hear? General fund. Yes, general fund. If you kind of go in your mind thinking through the different types, the general fund, and it's mostly because a parish government and city governments, their expenditures are going to be by their different departments. You know, the different departments, and the maintenance department is one of those departments. So that's just going to be handled in the general fund for $10,000. G, a city government contributed $500,000 to a pension plan administered by the city for its teachers, which this must not be a Louisiana example, of public safety employees and employees of the water department. Okay, so this is a big one. This one's got 3 different funds used in this example. A pension trust is one, yes. General fund, why? Yes, for all the employees other than the employees in the water department. Okay, so it'll also, yes, it'll also involve the enterprise fund and the general fund. Okay, and that's for the expenditure for those employees that are paid out of those 2 funds. The pension trust is where we're holding the money. Okay, the money's being held. Okay, so now we're going to get into a little bit of accounting, okay? So those of you who are in the areas of your government where you make journal entries, this is a good tool that you can use for, I tried to find the most generic type entries that I could find, because we have a wide variety of audience today. So not every government's going to have every example, but I tried to give the basic examples that could apply to most governments, okay? Okay, first thing, property taxes were levied in the amount of $900,000. All taxes are expected to be collected by February 2020, except for a 1% uncollectible. What that means is, just like real businesses, when they sell on credit, they're not expecting their customers to pay them back 100%. There's always a little percentage of customers that are not going to pay. So that's what that 1% uncollectible means, that the government's expecting to collect all of its taxes except for that 1% that are not going to pay. Okay? So the entry here would be to debit taxes receivable. Okay, and again, this is just normal accounting applied to the government. So we're going to debit taxes receivable for $900,000, because as soon as those taxes are levied, we can now recognize them as revenue because they're measurable and they should become available within the next 60 days, which would be February 20th. So we can count it as revenue. So property tax revenue, $891,000. Because after we take out the 1% uncollectible amount, now we actually expect to collect in cash $891,000 of that $900,000 that was levied. Okay. Now this is not the property tax people. Okay, this is when we get our property tax money from the property tax people, the assessors and the sheriffs. Okay. So this is what all the other governments would record that receive taxes for property. Okay? So now what this is showing, for those of you, not wanting to learn accounting, this now means we have revenue of $891,000 on our books that can offset expenses. Okay? We also have taxes receivable, which means now we need to try to collect that $900,000 from all of our citizens. Okay, so this is the property tax people. No, sorry. This is the government's, this is not the assessor. Okay, it's for all the other governments that get the money from the assessor. So we're going to have to go out and try to collect those money, make sure the people are paying their bills for that receivable, and then we have in the back of our mind that that $9,000 is always a chance that we're not going to collect that whole $900,000. Okay, next example, and this has to do, this is a totally separate example. Most of them are just standalone journal entries, okay? Our cash receipts totaled $870 for property taxes, so it does have to do with the one before, and $290,000 for other revenues.
The slide.
Oh, thanks. So we collected $1,160,000 in cash. So that debit to cash shows that our cash is now going up by $1,160,000. We just recorded the property taxes receivable in the previous entry. Okay, $900,000. Now we're collecting $870 of that, so we're going to reduce that receivable because now it's not owed anymore because the citizens are paying. Okay, they paid $870,000. And then just for brevity and because this is trying to be simple, the entry I just credited other revenue. I mean, whatever type of revenue it is, you would just put that there for $290,000. So again, this entry is showing our cash going up by $1,160,000. We've collected $870 of our $900,000 accounts receivable, and we also have increased our revenue by another $290,000. Okay, accounts payable, so those are our bills, were paid in the amount of $1,070,000. Okay, I have that word prior right there in the front of the first entry, because what should have happened prior to us paying those bills is that we should have entered them into our accounts payable system, okay? And at that time, when you enter them into your accounts payable system, you're debiting whatever expense, you're increasing whatever expenditures you're paying for. Whatever expenditures you're paying for in that batch for that day. And you would credit accounts payable. And that means a credit to an accounts payable means that's going up. We now owe $1,070,000 to our vendors. The reason we do that is because, the reason that this is better, now I know we have a lot of small governments and y'all probably just, whenever you pay it, you charge the expenditure and you credit cash because you're paying them right then, same day you're doing it. This is an instance when we're constantly entering bills into our system, and then we might pay every 2 weeks or something like that. So you're getting the expenditure in when it should be, and then you're paying the bills when you need to. So prior to us paying the bills, we would have recorded that first entry. Increased our expenditures, and again, it could have been a variety of different expenditures. And credited accounts payable, which says to whoever's looking at the financial statements, that says we now owe our vendors $1,070,000. When we go to pay, which is this example, when we go to pay those bills, we would reverse that accounts payable balance, which it was credited, now we would debit it to clear it out, and we're going to lower our cash now because we're paying those bills. So a cash credit is a reduction of cash. Okay, I have this next slide. I'm going to talk a little bit about the idea of encumbrances. Have y'all ever heard that word, encumbrances? Okay. Hopefully you have. The purpose of encumbrances is to sort of put aside funds so that we're not double spending and then end up spending more than our budget. It's sort of like a placeholder, and I'm going to give you an example of why this would be. You would say, well, how would we not know that we're overspending? If you have a small little government with 10 employees, then that's easy to keep track of who's spending what, okay? But when you have a statewide government, when you have a parish government, when you have a city government that's a fairly big size, you have many people that might have authority to commit funds for the government, okay? You might have the maintenance manager who can go commit money. You know, the mayor, even administrative personnel may have a reason to be able to commit funds for the government. So if you have all these different employees that can commit funds for the government, how do you know when who's doing what, okay? Because I'm in maintenance, I'm not paying attention to what necessarily is going on in administration. So what we do is, to help contradict that, we use an encumbrance system. And I use the example too of a university. I use this example to my students. In a university, if you think about it, all the different buildings, every building's going to have someone that's responsible for maintaining that building and making sure that it's running properly, and they have to go buy things. And if we don't use either a purchase order system or the encumbrance system, there's a possibility that if we have, let's say, a maintenance budget of one big number, $1 million, and you have all these different people taking from that $1 million, how are you ever going to know when you're going over your $1 million? You would have to run a report every month or every day to make sure, even up to the last minute, because people can, sometimes governments can go, you can just go to the office supply store. You shouldn't, but you could go to the office supply store and order some supplies, and until that bill comes in, nobody knows that you went and committed some funds, okay, because there's no paperwork for that. So the purchase order system's a good internal control that you should use, because that does help to set aside funds so that we're not overspending our budget. The encumbrance system is another way. It's mostly used for contracts. It could be used for in place of purchase orders also, but it is mostly used for contracts. So what we do is with contracts, if you think about it again, we're building some large building, okay, and we've got attorneys we have to pay, we have construction people, we have architects, we have engineers, we have all these different things that we have to pay besides the construction costs. So you've got all this activity going on in different directions. So if we know we've committed, because we've signed a contract with the engineer for $500,000, if we use an encumbrance accounting, that's going to subtract from the amount every time you issue a purchase order or use an encumbrance. It'll take the money away from the 500 so that nobody else spends that same money, okay? And then that way you're staying within your contract for the engineers, okay? Yes. Okay. So on 9/20/22, the maintenance department purchased fertilizer for $5,000 that will be used to maintain ball fields, okay? Again, a common thing. We have one maintenance department, but you have different areas of the department that can spend funds. So the best thing to do would be at the time that it's decided that we're going to go purchase fertilizer, either issue a purchase order or you make an entry into your records. Debit the encumbrance, which acts like a temporary expense, okay, it's temporary, and then you credit reserve for encumbrances $5,000. So now that $5,000 is sort of set aside so that no one else can come and spend that $5,000. And this $5,000 will be subtracted from the total maintenance budget as soon as you record an encumbrance. So that it subtracts now from the total budget. So you know, okay, so now this is all I have left after this $5,000. Okay, so that's just one part of it. That's sort of setting the money aside. Okay, so now the maintenance department purchased it, so now they're going to get their fertilizer and their soil or whatever they're buying. So at that point, and that shouldn't say payment, at the point that the goods are received, that shouldn't say payment, it should say at the time the goods are received, you would debit your maintenance expenditures, which is the real expense, okay? It's what it would have been charged to, and you credit accounts payable, because we're not going to necessarily pay that bill right now. We're picking up goods, but we might not pay this instant for it. So you're reversing out your encumbrance. I hope nobody records this. I'm going to say a fake expense, okay, is what it is. An encumbrance is sort of just holding aside money for the real expense that's going to come and take its place later. Again, it's just to avoid overspending. So you're going to reverse the encumbrance when we go to, when the goods are picked up, you record your maintenance expense and you credit accounts payable, because now we owe that vendor $5,000. Okay, at that point, and it's showing in the financial statements. Then we can reverse that encumbrance that we recorded up above. So the last entry is just exactly opposite of the first one. It's to clear out the encumbrance, so now we've got a real expenditure, our maintenance expenditures, so now that placeholder doesn't need to be there anymore, so we get rid of it. I see some questioning looks. Did I go too fast? Okay. Again, to avoid overspending when more than one person has authority to commit funds. and they're not necessarily in communication with each other. Y'all know how that works, right? Not everybody's in communication with each other. Okay, so that was supplies, maintenance supplies. This is an example of when a contract is signed. So we issue a contract for contracted services, whatever they are. When the authority for the government signs the contract, whoever that may be in your organization, when the contract is signed, this is the entry that should be made. And again, you're not going to always get that information right away. Encumbrances would be debited. In other words, holding aside that $90,000 so that nobody else spends that $90,000, and crediting reserve for encumbrances for the 90. Yes.
Do you cover the entire contract in whole? Like, say it's a 12-month period. Would you encumber the entire contract and then slowly reduce the encumbrance as it's billed?
Yes, you could. Yes, that would be the best way. The most correct.
Just curious, thank you.
Can you give me a little bit more detail? Or are you just thinking of an example?
Usually when I say encumbrance, it was just like you get a bill, even if it is like one month out of 12. But I was curious if you just did the whole thing, and like you're saying, you're not talking to anybody else, so they can see.
That's
that
correct.
you've
Yeah.
already pulled in
Yes.
all those other.
That is the best. Yes. What you said is the best solution.
Repeat the
Oh,
conversation.
sorry. His question was, when you have a contract, do you wait? What if the contract is paid over time? It's not necessarily paid out in one chunk, okay? So this would be an example of where we're putting it all in one amount into the encumbrance. Again, but his question is, what if the contract gets paid over time? It's not, you're not going to get the whole $90,000 at one time. So his question was, can we remove whatever amount we pay from the encumbrance as we're paying it monthly? And yes, that is correct. So if it's let's say it's a contract for 10 months. Okay, so we're going to pay 1/10 every month. So then that would be $9,000. Every time we get a bill, we're paying $9,000 for that contract. That would be when you would reverse the encumbrance for the $10,000. So now, after you make your first payment for that contract, it's going to lower, you're going to credit your encumbrances and debit the reserve for encumbrances, and now your reserve for encumbrances is just going to have a balance of $80,000 in it. So everybody looking at the financial statement or a report is going to know that's how much left we have on that contract. Okay. 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 And again, that's good. This is why communication is important also, because contracts get signed and the accounting people don't always get, or the people responsible for recording those don't always get the information. So communication is important. Okay. Okay, so that was a contract for $90,000. So this one's continuing on for that same example. Contracted services were performed relating to $81,000 of the contracts, but the invoices amounted to $80,000. So the question prior was about getting billed on a regular basis. That's assuming that those services are going to be provided on that monthly basis, okay? So here, we don't know how, we don't know how the work's going to get done. It depends who the contracted person is. So someone has to let you know that we set aside $81,000 in our encumbrance for this particular part of the contract, but we're only going to pay $80,000 for it because it ended up not costing what we thought it would. An encumbrance sometimes isn't an estimate, okay? So what we have to do down here at the bottom is reverse the part of the encumbrance that was for this payment that we're making, which was $81,000, and credit encumbrances for $81,000. Again, we're just reversing, we're just reversing part of this entry because now those services have been performed and we're getting ready to pay the person. So we're reversing part of this $90,000 with this $81,000 down here. However, when we're going to pay the bill, okay, it didn't cost us $81. It only cost us $80 for those services. So we're not going to pay $81. We don't want to do that. We're going to pay our $80. So that's when you record the contract expenditures. Okay. So again, they're called expenditures when we're talking about governmental funds. And credit accounts payable. If you're paying it immediately, you could credit cash, okay? But we normally put things in accounts payable first and then turn around and pay them later.
Can you explain the difference between an encumbrance and expenditure?
An encumbrance is just sort of a setting aside of an amount of money because to avoid overspending. That's what I was saying earlier, when you have all these different employees that have the ability to commit money and not everybody necessarily is communicating with everybody, or you're in different locations or what have you. To avoid overspending, an encumbrance is sort of putting aside money so that we don't overspend on that budget. But as soon as that expenditure comes about, you take it out of the encumbrance, okay? But what's going to replace it? Your actual expenditure for whatever it was, okay?
Stacy?
Okay, we're going to continue on with some basic governmental transactions. So this next one is, the city received a check for $50,000 from its insurer on 10/15 of 2019. It was for wind and water damage sustained at city parks in mid-July of 2019. Okay. I'm sorry? I'm sorry? Oh, okay. I have 2019 on my copy. Okay, sorry. Okay. I had fiscal year of 2019, but it's 2022. So what are we getting? We're getting insurance proceeds for $50,000. So what is the obvious entry we have to make for that? We're increasing our cash by $50,000, and we're going to deposit that in the bank. The technically correct answer for the credit is something called other financing sources of funds, okay? So we have this, an account called other financing sources of funds, which means it's not in the normal course of business where these expenditures came, this revenue came from. So we call this other financing sources of funds. It's sort of like a revenue, okay? It's kind of like a revenue. But I've also seen where insurance proceeds, reimbursements just get credited to the expenditures that we paid for, that this insurance is covering, okay? So if we had wind and water damage at our city parks and we went to maintenance expenditure when we paid those for those damages, and now we're getting $50,000 to reimburse that. I've seen where we just credited those expenditures also, but the better way is it's an other financing source of funds, and that's so you can show, that's so you will be able to show that we've earned some sort of revenue other than just our normal revenue that we get. Okay, it's an other financing source of funds. Okay, so now we're looking at the Public Works Director. He or she has issued a purchase order for $25,000 of tar and asphalt. Going back to using the encumbrance system, okay? And this is, the encumbrance system is used both. It's also used for when someone just goes and verbally commits funds for the government, okay? So it's a similar situation where we're sort of putting the expense aside until we pay for the expense so that we don't overspend on our budget of maintenance supplies, okay? So here we would debit the encumbrances for $25,000 and we would credit the reserve for encumbrances of $25,000. And that entry would stay like that until we actually received the tar and asphalt, okay? When we actually receive it, then it becomes an expenditure and we can clear this out, okay, for $25,000. Okay. Okay. So we're changing course a little bit here. Now I'm going to talk a little bit about our two sets of financial statements. Remember at the beginning I said, students, why do we have to have two sets of financial statements? You know, anybody that looks at a set of financial statements, government financial statements, that thought usually crosses their mind also. Why do we have two sets of financial statements? You have your fund financial statements where each fund's got its own, and I'm going to use the generic term of balance sheet and income statement, okay? Each fund's going to have its own set of books. With the government-wide statements is sort of where we combine all that activity together. And remember I said that directly resulted from a bankruptcy a long time ago in the 90s or the late 1980s. That was a long time ago, and that's when GASB decided, because people were concentrating, whoever was reviewing financial statements was just looking at each fund individually. So when you say the general fund has cash of this amount and your capital projects has cash of this amount, debt service shouldn't have any cash in it, all your different funds have some cash in them. If you're just looking at each individual statement, there's no way for you to really know, okay, how much in total does the government actually have in cash? And that was one of the reasons for that bankruptcy at that time, is because nobody really had an idea of how much cash. They might have been showing revenue, okay, but we all know you can show revenue, which brings up your balance, but until you collect the cash, you can't buy stuff, okay? So you have to be able to collect the cash. And that doesn't always happen. Well, that's the case that occurred in Orange County. So what we now have are two sets of financial statements for every government. The first set is what we call government-wide financial statements, and it's exactly what it says. It's a set of statements that presents the government as a whole. The fund financial statements are exactly what it says. It's each individual fund has its own financial statements. So what are on the government-wide financial statements? First of all, it's on the accrual basis. Remember, that's our basis of accrual for the government-wide statement, accrual basis, normal accounting. It includes governmental funds and our enterprise funds. Remember I said it does not include fiduciary funds on the government-wide financial statements, because again, that money is not for us. We're just holding it in trust for someone else. It provides information about the government as a whole. And the fund equity is referred to as a net position. Okay, so that means what's left over from our assets minus our liabilities is called net position on the government-wide financial statements. each individual's fund financial statements, the general fund should have its own statement, okay? And again, you should only have one general fund. All the governmental funds, which would be your capital projects, debt service, special revenue, and what's my last one? Permanent funds, okay? So you're going to have the enterprise funds, the fiduciary funds on their accrual basis. And you might say, well, why are we showing the fiduciary funds on the fund financial statements but not in the government-wide? Because again, they're not our money, but we still need to account for them because they have been entrusted to us. So we have to have financial statements for them individually. The fund equity in the fund financial statements is referred to as fund balance. So I know most everybody in here is familiar with that term and knows what that means. It's on our balance sheet of our fund, it's our assets minus the liabilities, and you have what is left over, and we call that fund balance. Another history story, I guess, because I've been around long enough now to have lived through a lot of history. With the fund balance is we used to just divide it into two categories, and I don't right offhand because we've been using these new categories for a long time now. But I don't remember the two previous categories, but they will only divide, the fund balance was only divided into two categories. Well, we discovered, not me, but it was discovered that that maybe wasn't enough information, okay? So now we classify the fund balance into different categories. And the next slide shows you what the fund balance, the categories that the fund balance is in. So again, assets minus our liabilities is going to be that fund balance left over, and whatever that amount is, we're going to divide it into these 5 categories. And there are specific things about each category about what can go into which level of fund balance. And if you notice up at the top, I have categories based on their level of constraint. That means, okay, are these funds restricted for some reason? Which means, you know, they're restricted, so they can only be used for a particular purpose. Does some law tell us this? Did our own government decide this? Or did an outside donor decide, put this restraint on us that we can't spend certain funds? So the categories are based on the level of constraint, with the most restrictive up at the top, okay? So that most restrictive category is non-spendable fund balance. So what that means is non-spendable. What does that mean? Non-spendable, okay? It can't be spent. These are things that can't be spent. So some examples are prepaids. Prepaids are things that we pay for in advance. Okay, so the cash has already been expended to someone. They've been paid for in advance. Okay, so that's money that's not left over. It can't be spent. Inventory. If we have any types of inventory, you can't spend your inventory. And then, of course, that permanent fund, remember how it has a part set aside that can't be spent. This is called the corpus. So the non-spendable category is the most restrictive level. Then we come to the second level of restricted fund balance. Okay, so again, a little less restrictive than non-spendable, but still restrictive. What goes into our restricted fund balance? If we have external parties that put some kind of restraint on us on how we can spend certain funds, those funds would be restricted. If the Constitution, a Constitution tells us these funds can't be spent except for a particular purpose, then that would be restricted. If we have legislation that's drawn up, then that tells us this is the only way you can spend these funds, that's restricted. So the next category is committed fund balance, and that's the highest level of the decision-making authority. So in other words, it would be the board of the organization that can commit funds. It's somebody at a higher level that's restricting funds. So external parties can restrict our donation, our restricted External parties can determine our restricted fund balance. The Constitution can decide that. A law can decide that certain funds are restricted. Our board of our own government is the one who can decide what funds are committed. And that's usually by some declaration or signing of a contract, something like that would be committed funds. And again, it's our highest level of our board, internal to the organization. Then you have the assigned level, okay? That just is an intention by the government to use certain funds for a particular purpose. It just means we intend to do this, okay? No signed documents, no, maybe some conversations between parties that we're thinking about doing this, okay? So let's set aside some funds. That would be the assigned category. Okay. And then finally, the unassigned category. Those are our funds that are left over that have no restraints. The only fund that can have an unassigned category is a general fund, okay? Is a general fund. All other funds are going to have at least up to the assigned category. They're not going to have any unassigned. Okay. Now, so what does this tell? What is this? How does this provide information to us and our board members? Well, first of all, when we just had two categories of fund balance, it was probably restricted and unrestricted. But, Diane, do you remember? It was restricted and unrestricted, so we just had two categories. Well, when we used the word restricted, we didn't know if, okay, does that mean a law is saying that? Or does that mean, you know, the board decided to do that, which maybe can be changed? Or is that some constitutional thing? Is that what restricted means? Versus unrestricted, which means no restrictions. Okay, so it was a little hard to determine how much of our fund balance was actually available to use. And that is the number that most of our government officials, when they come in new, okay, they're going to go and look at that and how much money do we have to spend or how much money is left. And that unassigned category is really the only level that is left to do something other with than all these other four categories, okay? So you can see where that now brings your amount available to freely spend at much lower amount than what you would have thought it could be, okay? And if you need to look up more information about that particular slide, this was GASB 54. Governmental Accounting Standards Board rule number 54. We are dividing the fund balance into 5 different, more descriptive terms. Okay. Okay. So another test, another quiz. That's how we keep students awake. Okay, so just to refresh, because you can't see the slide, non-spendable means prepaid's inventory or the permanent fund corpus. That's non-spendable. Restricted means by an external party outside of our government, either a donor, the Constitution, or some law outside of our purview is restricting funds on us for some reason. The committed fund balance is our own government, the board of our own government making restrictions on how funds can be spent. So the highest level of our board, the highest level of our organization, which is our board, can commit fund balance. The assigned just means it's intended for us to be spent that way. It's intended for us to be spent that way. And then unassigned means there's no constraints on those funds. Before we get into these examples, I just want to, because something just occurred to me. Why, okay, the assigned category says intended for specific use by the government. Okay, so intended can be in a lot of things. It can mean I just had it in my mind and that's what I thought, so I intended to do that. Okay, it could mean you and I have a conversation and we agree that that's what we think should happen. But what might lead us to do something maybe that we shouldn't necessarily do between assigned and unassigned categories? Yes, calling something, we want to set aside money for an emergency, okay? Assigned should be an intended specific purpose. So there could be the impetus to sort of classify things as assigned when they're really not assigned or really not intended to be, so that anybody looking at it will say, okay, all we have left is the unassigned category, so I can spend this much money. But when you start doing that kind of thing in government, again, especially with our governmental funds, we're on the current focus, which means worried about collecting enough revenue this year to pay for our bills this year. There should really be no saving up of money. I know we have to do that, okay? But there really shouldn't be. Citizens expect when they pay taxes for a year that we're going to spend that money like we said we would this year. They don't expect that we're going to accumulate money, okay, to spend somewhere further down the line. So there could be the impetus, like I said, to sort of classify something as assigned when really it's unassigned, sort of hiding from everyone that we really have much more to spend, okay? So that wouldn't be good business practice. Okay, so categorize these different fund balances for the city of Grayland. Okay, so we're a city, and we have, and again, this is all our fund balance. So this is not our assets, this is not the liabilities, this is the part that's left over. We have $250,000 of unexpended proceeds of a state grant required by law to be used for education. Okay, so we just didn't spend the entire grant yet, is what this is. But it's a grant that's required by law to be used for health education. So what category do you think that would go in? Restricted. Yes, restricted. Okay. So again, that's the second category. So that tells someone right away, oh, we can't fool with those funds. Okay. Except for health education. Then we have a $10,000 balance of prepaid insurance. Non-spendable. Prepaid items are non-spendable. Those are things we've paid for in advance. Inventory is not spendable. Some examples. So this is non-spendable, $10,000. So we can't even look at that one. Okay. Okay. I'm going to skip over this next one for a minute. The next two. I'm going to skip over the $600,000 and the $200,000 just because it requires more discussion or more explanation. So $275,000 provided for contractual obligations for capital projects. Okay, I'm hearing a couple of different things. $275,000 provided for contractual obligations for capital projects. When you say contractual obligations, that means someone in our government has signed a contract with someone. So who is committing these funds? Our own government. The highest level of our authority of our government is committing these funds. So this would be committed, yes. This layer of fund balance would be considered committed funds. $26,000 unexpended proceeds of a tax required by law to be used for the 911 emergency services. That would be restricted. This is required by law. We didn't make this decision. So that's restricted. Okay, so back up to the one for $600,000. Rainy day funds are something that it's just something that's been talked about and discussed, and Louisiana, the state government, has a process whereby, you know, they discuss the rainy day fund. So it's a topic of discussion. 600,000, because again, the question is, should we be accumulating funds? Okay, shouldn't we be spending the money that our citizens are paying their taxes to provide? So we really shouldn't be, quote, quote, saving any money. But what was decided, okay, and I'm not sure if it was GASB, I'm not sure how it was decided, but there was plenty of discussion about it, that a rainy day fund, okay, should either be classified as committed or unassigned. And unassigned means no restrictions on it. Committed means that we're going to set aside some funds for a specific purpose. And I'm going to just give you one example that we could say is we need to do a technology update. Okay, it's past time. We need to do a technology update. We're not going to have enough money in the next fiscal year or enough funds in the next fiscal year. We want to start sort of setting a little bit aside, okay? That is acceptable if the specified circumstances, or in other words, if the funds are committed, okay? The funds are considered committed. So you would think that in this case that there would be some kind of contract already signed, okay, for the use, but it is decided by our own government. The board of our own government is deciding to spend these funds in a particular way. So rainy day funds should either be classified as committed or unassigned. So you can see the $600,000 is saying that it's approved by our city council, which is our board, and it's saying we're going to use those under specified circumstances. Now they're not saying we're going to use it under specified circumstances. The information's telling you that they're going to use it for a particular purpose. So that could be classified as committed funds. Look at the difference with the next one. $200,000 budget stabilization fund to be used in the event of revenue shortfall. Unassigned. We cannot set aside money just in case something doesn't go well next year. Okay, so that would not be an acceptable reason to classify them as committed. Okay.
Not even if you're using them to continue services? If it were, or you would have to say
If you-
that it was going to be to continue services, did that happen? Have to be approved by council?
Yeah, this one, a lot of times in government, rainy day fund and budget stabilization can mean the same thing. And what they're trying to say is we want to set aside some fund balance. Like in Louisiana, a lot of us have hurricanes, right, and are in danger of that, or just in the event of revenue shortfall. So if the government sets at its highest level of authority, which is by adopting an ordinance or a resolution, that's going to happen. And I just realized my online folks aren't. Sorry, all my online audience. This is Diane. So what we're talking about is a rainy day fund and a budget stabilization fund are often interchanged and mean the same thing. And what they want to do is designate a part of fund balance just to keep it around in case of emergencies. So if the board has done this by ordinance or resolution, and what you will also see is a policy about this. How much money, how does it get put in, how does it get replenished when it gets used? And that's what Stacy meant by saying there's a lot of discussion around this, and Louisiana has laws around it. So if it's committed by the board with a policy, with an ordinance or a resolution, then those would both be kind of the same thing, and they would be considered committed.
So the 200,000 would be considered unassigned, okay, barring a commitment from the board. The 200,000, if it's not approved by the highest level of authority, it would go in the unassigned category, which the highest level of our board authority is committed.
I have a question.
Yes.
Is there, it's kind of like two questions. I noticed I don't think there was an assigned example up there. I don't think there was an assigned example here, so I'm a little hazy on what is assigned.
Assign, the technical word is intended for use for a particular purpose. And that's what I was saying. Does intended mean, you know, there should be some clear evidence of that there is an intention. So if you and I have a conversation and we say that might be something good to do for next year, okay? That's just a conversation. I would think if you had, if a good example would be purchase orders. If you have some outstanding purchase orders that have not yet been filled or completed, that is our intention because we issued purchase orders.
That's what I was going to ask was, is there a relationship between assigned and encumbering? And so if you have encumbrances,
Yes.
does that become assigned?
Yes. Whatever has not been reversed out of encumbrances, that part of it could go in the assigned category. Yes, if you're talking about purchase orders.
All right, thank you.
Uh-huh.
So when we say we put money allocated for certain things on the side, that would be the same thing as assigned?
There would have to be some sort of to say assigned, there has to be some evidence of an intention by the government to do a certain thing. And that's what he was saying. A purchase order would definitely show an intention to assign funds for a particular purpose.
So if we put 200,000 on the side, allocated to buy playground equipment for this park, but it's 200,000 out of the recreation fund allocated just for this certain particular park. And this particular,
Okay, but how are you communicating that that's so? That it's been allocated? How is that?
right,
Is there any kind?
council meeting that we got
Oh.
$1 million bond, and out of the $1 million,
Okay.
200,000. Meaning
Okay,
that we're taking 200,000.
if you took a formal action, if the board took a formal action, then that's committed. That's not even, it doesn't have to be, committed is more restricted than assigned. Assigned just means we have intention, and usually that's shown by purchase orders. Because if we issue a purchase order, that means somebody got approval from somewhere, so our intention was to use that unassigned balance for the purchase orders. But if the government itself has made the decision, that's committed fund balance. So yes, that should be set aside in the committed category.
Stacy, can you repeat the questions? Not, you got it for this, but
Okay,
in the future when they're.
okay. One of the questions was when we're encumbering funds and then they get cleared out, that is sort of the same thing as assigned. That's the assigned part of the fund balance, is those purchase orders that haven't been completed yet. Okay, so an intention to spend money in a certain way is the assigned category. So a purchase order can definitely show the intention of the government to spend money in a certain way. So a purchase order and encumbrances sort of go hand in hand, and they would be in the assigned category. Okay. And the other question was about funds that were actually committed by the board of the particular government. So those are committed funds. If it's an action by the board, okay, then that is definitely committed funds. Okay. So the next exercise, now you're going to do a little math exercise, okay? You got your calculator? Does everybody have their calculators? This is just to show you that the fund balance has to, first of all, assets equal liabilities plus fund balance, okay? The fund balance and the liabilities have to equal the assets. So that, just that part of fund balance is divided up into these different categories. But I'm saying here we have a $1,622,000 of total fund balance. If you add up all those categories, they don't add up to $1,622,000. It's actually missing $261,000 that's not accounted for. So where would that amount go, do you think? Unassigned, okay? It's unassigned. All the restrictions that we knew of were on this page. That's the only ones we know about, okay? So the remainder of it, whatever, we need that total to be $1,622,000 because that's what our assets minus liabilities is. So therefore, we're going around and saying, okay, we know $250,000 of our net resources is required by law to be spent a certain way. We know that we can't spend a prepaid item. That's not possible unless you would liquidate the prepaid. Then we have a rainy day fund that is committed. We have another $200,000 that really should be unassigned if it's just to say we're putting money aside. We have $275,000 committed for contractual obligations. $26,000 is restricted for the emergency 911 emergency service, and our total needs to be $1,622,000. So if you add up all those numbers, again, there's a $261,000 difference, and that means there are no restrictions on that 261, okay, that we know of, because what we know is all of this. So your unassigned fund balance would be $261,000. So if you think about the way the fund balance was presented prior, remember I told you it used to be just two categories, restricted and unrestricted. Well, there really wasn't a definition of what restricted meant, okay? So we could have said something was restricted just because of us saying it was restricted. There wasn't really defined rules about that. So again, it was a little murky about what fund balance was actually available to spend. So can you see where these categories make it more clear? Okay. So this doesn't look too, 261,000 of unassigned doesn't look too good compared to 1,622,000 of total fund balance. That's how much of our 1,622,000 has been committed already. So no one can go in here thinking that we got 1,622,000 to spend. Okay. Okay. So the next step is talking about the annual comprehensive financial report. And I know that's something that our government officials are always new government officials are interested in. They want to learn about, how to read the reports, how to look at them. So I just gave some basic information on the annual comprehensive financial report, just to kind of give you an idea of how the order of things and what we put in a comprehensive annual financial report. The financial statements all the things that we just talked about, those fund financial statements and the government-wide statements, those are definitely in the comprehensive financial report. But there's a lot of other stuff that goes into the report, okay? If you've ever, how many of you have ever taken the time to look at your own government's, I'm going to say ACFR now, that's the new ACFR. How many have ever asked, how many of you work in the accounting department of your government? Okay, so y'all have at least sort of seen some of the workings of it. Y'all do some of the work for it. Has anybody else ever asked to see one of their, okay. I know the government officials, the new board members, things like that, they usually want to see financial statements. You have people that request, companies that request a copy, and usually that's your lenders, okay? They're looking to see, they want to see your financial statements, which are in this report. Lenders, sometimes citizens ask for a copy. They want to see the report. And they're usually, I don't know if you can see this, they're usually about this thick because we put a lot of information in there. It's not just the financial statements. So in the introductory section, what you should do is go to your government after, right after you leave here today, and get a copy of their annual comprehensive financial report and see if you can find some of these things that are on the slides. We have the introductory section. Well, the introductory section is not audited, okay? Also, there are other things that are not audited in there. The financial statements are definitely audited by someone, okay? And if you're a government, it can be the Louisiana Legislative Auditor, or you may have your own independent auditor that audits your financial information. So the introductory section has a table of contents, just to tell you what's all in there. There's a letter of transmittal by the CFO. So the CFO is going to do a letter of transmittal, and that's just some general information about the government. You're going to have a list of the government officials, so your principal officials. So that's basically the board. Okay, you're going to have a list of those, and usually a picture with them. You're going to have you should have an organization chart, which says, okay, who is at the top of the organization chart and what are the different levels. If you're not sure, if you don't know what an org chart is, that just means that shows you the levels of authority certain positions have and who is the ultimate authority. So who is the ultimate authority for any governmental body? The board, okay? But then would be either the president or the superintendent or the mayor or whatever, the person that reports to the board. Any certificates of achievement in financial reporting. We have a lot of governments in Louisiana that obtain this certification. I'm not going to say it's difficult to do. It is a little time consuming, but once you get your books organized in a manner that you can achieve this award through GFOA, and that stands for Government Finance Officers Association. If you can get that certificate of achievement, that is a big step, and it's something very prestigious too, as far as government goes. So that was your introductory section. So then your next section is the financial section. So this would be where most of the things that we've talked about today you would find. You're going to have an independent auditor's report. So that's whoever. So the auditor has to be independent, okay? It can't be the president of the board. And Louisiana Legislative Auditor does a lot of government audits. They do a lot of governmental audits, but a lot of governments also have their own personal auditor, but independent. And they are going to check the records, the financial records, make sure that they can get reasonable assurance that the numbers in the financial statements are accurate, okay? and they're going to have to see some transactions. They're going to have to see some documentation. So you'll pull information. So they need to get, because if you think about it, okay, these financial statements are very important. Just like a regular business's financial statements, if it's a publicly traded company, those are very important to the financial world. Okay, we saw what just happened with a bank in California, Silicon Valley Bank. That was a big ordeal. Government has the same, now we know government has the same potential to go bad, you know, if we don't have proper business practices, or if we're not looking at our financial information and making changes. So just as companies get their books audited, government also gets their financial statements audited. The next section in financial section would be a management discussion and analysis. And that I have a note on here that's limited to 8 specific items. And I didn't refresh my memory last night to memorize what those 8 were, but there's 8 specific items that can be discussed in the management and discussion and analysis. And the reason for that is specifically so that we avoid political messages. Okay, so they want this to be an objective discussion of what has occurred in the organization this year. But it's only limited to 8 specific items. Diane, do you know the 8 items?
Basically what it is a discussion of like your capital assets, or changes in your capital assets. It's a discussion of your debt. It's a discussion of your budget and the variances between them.
Yeah.
For those results and some other things. So what it is basically are facts. It's facts, not opinions.
Right.
It's not what we hope. It's not what we plan. It's not what we dream, because that may not come true. It also includes a discussion of next year's budgets and things that could affect next year's budget. So, for example, if a government may have, I'm sorry, I have the microphone right here. For example, if a government may have lost a major employer, and that's going to affect its tax income for next year, they would talk about those things. But in the MD&A, it's just basically objective about the facts. Now, what you will see written are things like our capital assets increased by 3%. That's not sufficient to meet the requirement. The requirement is to say why they increased by 3%. So then you could say because we bought, you know, we finished constructing some of our buildings, or brought them online, or we bought school buses, or things like that. So you would say why. You don't just say the percent and the number.
So facts, not opinions. The next section is the government-wide financial statements. Okay, so that's what we just looked at a few slides prior, where it's a representation of the government as a whole, the government-wide financial statements with all the funds in there except fiduciary funds. Okay, so all the funds we have except fiduciary funds. Then we're going to have the fund financial statements, and you might not show a representation of every single fund. Let's say you have 100 funds, okay? Some of you may have a lot more than that, some of you don't have near 100. You don't want to make the financial report so cumbersome by showing all of that people don't even want to bother looking at it because it's too overwhelming. So we don't necessarily show every single fund separately. We can combine some funds as long as they don't make up a majority of, it has to be, the ones we combine have to be, when you put them together, they can't make up a certain percentage so that they would have to be shown separately, okay? A fund has to have a certain fund balance for it to be shown, or a certain amount of revenues to be shown separately. If you put the funds together and they're more than those limits, then it has to be shown separately, okay? So again, you don't have to have a fund financial statement shown in the report for every 100 funds that you have. Okay. Now, notes to the financial statements, and then there's some required supplementary information, and I have a note on there. The required supplementary information includes the comparison of budget to actual in the general fund. So that's very important, and it's put in required, so that means it's required supplementary information. That's where constituents are going to want to see, this is what we budgeted, why did we spend more or why didn't we spend enough? That's where you see the budget to actual comparison. And we need to be able to have answers for them, okay? Then the notes to the financial statements. The financial statements are just financial data. So you have all the funds, you have their income statement and their balance sheet with all the numbers filled in there, but they're just the numbers. They're the numbers, and you can get a lot of information from the numbers. Notes to the financial statement means if we have anything to explain further, okay? If we have anything to explain further, we're not going to try to do that on the financial statement itself. You do that in the notes to the financial statements. Now, what ends up happening is the notes to the financial statements then end up becoming like 400 pages. And the thing is, who is going to read all of that? Okay, unless you're zoning in on one particular subject matter, nobody's going to read all that, but we still have to provide the notes that explain the numbers that are in the financial statements. Okay, so we have the introductory section, we have the financial section. The third part is a statistical section. And this is where we show sort of like economic information about our area, okay? Because that, if you think about someone from outside the state of Louisiana and they're looking at one of our big government's financial statements and they see something a little funny, but if we're explaining it, if that government's explaining it by something that occurred in the economy around here, for example, a hurricane or some disaster that has occurred, then okay, then maybe the numbers start making more sense. And they don't have to ask questions if they have questions. That the statistical section might answer those questions. So any financial trends for our own government, revenue capacity information, debt capacity. Debt capacity means how much debt, it's a percentage of how much debt we currently have. And do you think you want a higher number percentage or do you want a lower number for debt? Would it be better to have a higher percentage or a lower percentage of debt? Now, I'm just asking about debt. A lower percentage, yes. And we have this discussion all the time too, because what is a good number of debt? What is a good percentage? And it's always a discussion because you can have too much debt, but there's a possibility that you don't have enough. Because what does it mean if you don't have enough debt? Then maybe you're not borrowing money to advance your facilities, but you need to. So we just keep operating with the same old stuff. And then that causes inefficiency. So then we have a worse problem. So sometimes not enough debt is just as bad as too much debt. It's a matter of being able, the important thing with debt is being able to make those debt payments and interest payments on time, because that's what regulators look at. So if it's due June 30th, it needs to be paid by June 30th, okay? And they don't like it even a day late, so. Demographic and economic information. This is what I was saying earlier. You know, demographic information. Like I was saying about the example with Detroit. If you have a population migration away from your area, your government area, well then that's going to, again, that's going to explain some things. Why didn't we collect as much revenue? I'm not used to dealing with a microphone or slides. And then some other operating information. So you can have demographic and economic information that provides statistical information for those constituents who really want to dig deep into our financial statements and know everything about our government. I listed some helpful resources. What you should do, stepping back, what you should do is try to obtain a copy of your own government's ACFR, Annual Comprehensive Financial Report. You should find it in the business department or the accounting department. Most governments probably have that on their website now, but I'm still old school. It's easier to read a hard copy than going through the computer. And see if you can discern anything from your own government's financial reports. There are some helpful resources, because at the beginning of the presentation, I listed all the different types of governments that Louisiana has, okay? A sheriff government is not going to necessarily be run or have the same issues as a city council, or the school board. The school board has a lot of different types of issues. They're not going to have necessarily the same issues again as a parish. So there's a little bit difference about all the governments that all the units that are considered governments in Louisiana. So it's helpful when you come across either something new that your government has never done before, or it's something totally new for everybody. There's going to be resources out there. Someone's done the research, there's been some discussion, and there's resources out there to help you, because we're all in the same boat when that happens. When someone comes up with something new and we don't know how to account for it or how to handle it. So the first place for some resources is the Louisiana Legislative Auditor's Office. And I have to say, I've looked at this website a long time. The current website is much easier to navigate. So when you're looking for something, it's much easier to navigate. The Government Accounting Standards Board, which is GASB, that's the body that I've been talking about that tells us how to report things, how to record things for our governmental funds. They have their own website, and you can see it says .org because it's not a company, it's an organization. However, very important organization, because they're again making the rules of how we report things and how we record things in the financial statements. The Government Finance Officers Association, so that's an association of government finance officers. So mostly that's the business people in the government. Okay, anybody that's in the business office of the government. There's a Finance Officers Association. There's a national one, which means it includes all the governments. You can be a member. But we also have a Louisiana one that's very good. We have a very good chapter in Louisiana. It's called Louisiana GFOA. And they have conferences, about 3 conferences a year, and that's a source for information. Conferences, a good thing about conferences also is when you're gathered together and you're all talking about the same subject matter, you can come up with solutions, or you can find out how someone else is doing it, and that would help you when something new comes up or something you've never encountered before. The LCPA, that's the State Society for CPAs. A lot of them are specializing in government, so they may be able to help. The School Boards Association would be a good for anybody in here that's part of a school board. Their association's real good too. All of these associations are real good. So it's just like governments, to where you can get more information and help. It's a resource. Okay. And I really don't want to put up this slide, but I was told I have to. So, I'm talking about the picture part. My email, that's my personal email. I'll be glad to answer. I think we have some time. We do have some time for some questions. But if you think of something later on, what about this or what about that, I'd be glad if you can send me an email. I would be glad to help you or another resource, one more resource that I can give you, which is very helpful too. Now this would be more for the people in the business and accounting areas of the government, is even though it doesn't seem like it, we do teach governmental accounting at the university level, so there are textbooks out there. And you can find some that are not so complex that it's just too overwhelming. You can find some that are simpler, and at least you would have a resource that you could always look to, a book that you can keep, if you need any more help. Are there any questions? Or is everybody just hungry? Or sleepy?
Well, thank you, Stacy, for that.
Thank y'all
Let's
for
give
having
Stacy
me.
a hand.
Thank you.
She worked very hard over this. She stressed over this. She really wanted to connect with you. And she knows that there are many, many different governments that do many, many different things. So I thought a lot about a couple of things, and we're going to go all the way back in time to slide 8. Because I was recently in Pineville, and I'm going to tell you about Pineville to talk about these two things. Measurement focus is what? Basis of accounting, what do we measure? Basis of accounting is when, okay? When. So I was in Pineville, and long time ago on their Main Street, they had a bank. And the bank was right there front and center on Main Street. And so this is to illustrate the difference between a government and a for-profit business, okay? So here's the bank on Main Street. And what ended up happening with the bank is they closed. They weren't operating at that location anymore for whatever reason, we don't know. So in the for-profit world, your assets have to earn a return for those investors that she talked about, because we have the almighty stock price and earnings per share and everything else, right? And so when you have an asset like a building that's not generating the revenue for you in the for-profit world, what do?
Get rid of it.
You get rid of it, don't you?
Or you improve.
Or you improve it, or maybe you repurpose it, you put some money into it. So in Pineville, the bank closed, that location, okay? Fast forward, and the fine people in Pineville thought about this and said, you know what? It does not look really good to have a nice big building on Main Street that's sitting there vacant. So what did Pineville do? They bought that building from the bank, and they've turned it into a really, really nice community center. Okay? So when you think about this, what happened with the community center? Now the bank, now the people of Pineville have a community center. Anybody who's got a community center, is it used every day?
No.
It's not used every day. Do you think it would be in an enterprise fund or in a general fund? I like the crickets because it depends, and that's the answer, right? It depends. So that's a trick question. You know, it depends if you have a profit motive for that, right? Generally, community centers don't have a profit motive. So it would be just part of your general fund for that. So now they have the community center. And things happen at the community center, just like this center here for Breck in their recreation district. So let me ask you this. When it's not in use and it's losing money, what does the government do with its assets?
Let it sit there.
Sometimes they can declare it a surplus, like Stacy had the example of selling vehicles, I think it was, at a surplus, right? But a lot of other times, if you think about City Hall, if you think about your school buildings, if you think about a lot of other things, they can't sell the building. They can't sell the building. So that's why governments don't have a profit motive. Government's motive is to provide a service. And guess what? Stacy and I both worked at school districts. So that's public education. So anybody who's been through public education or has kids in public education, You don't pay for public education like you do if you went to private school. You don't pay, yet we have to provide the service. So that school building is not going to be up for sale. And what happens sometimes is people migrate, right? She talked about populations migrating and they leave. And so a school building that's built for 800 kids may only have 200 kids. And now the school district has to decide, you know, what are we going to do with this building? A lot of times they keep it open. You can't sell it. So the thing about the measurement focus, the current measurement focus that the funds have, it leaves off all the long-term assets and long-term liabilities, right? Because we are not thinking, it is not in our mind that we're going to sell City Hall or sell a school or sell a government asset. That's not what we do. We're going to keep that asset and pay that with the taxpayer money, right? Even though it's not necessarily turning a profit. So that's what we mean by current. So in our mind, long-term debt and long-term assets don't enter the equation for making today's budget decisions. That's your fund level, and that's the big thing. Now, let's go back to the long-term. Let me tell you a funny story, and y'all all know this funny story, or most of you do. So I've been where a government issues debt. Okay, and it is a happy day when you issue debt. So this is what happens. It's a long, long process, but let's just say it's all done. The board adopts a resolution, the voters vote for it, we got the debt, and then we say, okay, we're gonna issue $40 million in debt. And then what we used to do when I was at Ascension School Board, our bond attorneys were in New Orleans, so it was a field day, it was a field trip for us. And we got in the van and we all drove to New Orleans, and we were at our bond attorney's office who had a beautiful view over the city of New Orleans and the river, and we talked about that. And Diane, Stacy and I had the same job. We were basically the CFO of school boards. I am on the phone making sure the money's flowing. Okay, so the money's flowing, it's in the bank account, so then I get to report, yay, we got our $40 million, it's in our bank account. It is a happy day. And then you go to lunch, and you know what else you do with the $40 million? This is what you do with it. Stacy talked about this. You're gonna record it as other revenue, other sources of revenue, right? Revenue, $40 million at the fund level, go figure. Because the other side of that story is you have to pay that money back. You don't get to keep it as revenue. That's a big, big difference between full accrual and modified accrual. So now think about this. What happened to your fund balance when you got $40 million in revenue? Yoo-hoo! You just raised your fund balance, right? So the reason why the world wanted the government-wide financial statements and the full economic resources, that's everything, is because that revenue was, that having to pay back that money was nowhere to be found. It was on this account we all affectionately called back of the envelope accounting, called General Long-Term Debt Account Group, okay? So they said, no, that doesn't work, because in the for-profit world, when they issue debt, dude, it's debt. It's debt. You have to pay it back. So that's why you have the debt service fund, because you have to remember to pay it back. You have to pay it back. You have to remind your governing bodies. It's a happy day when you get revenue, but you have to pay it back sometimes over 20 or 40 years. So that's the big thing with those two, and that's really why the GASB wanted government-wide. Now the GASB is made up of, they call them stakeholders, and there are many, many different stakeholders, and I've learned this more and more working at the Legislative Auditor's Office, who are interested in your financial statements, okay? It's not just you, your auditor. We used to joke all the time that the only two people who read the audit report was us and our auditor, and that is so wrong, it's not even funny. We get calls. I get calls almost every day looking for somebody's audit report. So many, many people are looking for your audit report. Because why? Because whose money is it? Is it my money? No, it's the public's money, right? She talked about those sources of revenue. That's the public's money. So they're all looking for it, looking for that. So the GASB, the reason why they have some, can we just like call it weird? Like there's nobody in here from the GASB, right? So it's just us. It's all 1,100 of just
I think,
us folks.
John, I think
And so they're doing some weird kind of things. It seems to us weird kind of things here lately, getting us to put things on the balance sheet that were never on the balance sheet before. And that's part of this. So those of you who agonize over pensions, because you have a long-term pension liability. So if you're like Stacy and I at our school boards, guess what? Our school boards participated in statewide pensions, and the funding was determined by the legislature, not us, not our school boards. And so now we have to book a liability on our government-wide financial statements, but it's not up to our boards or us brilliant finance people to decide how you're going to fund that. That's not our decision to make. It's out of our hands. It's a state pension. So that's now on your books. Another thing that's on your books is on your balance sheets is called Other Post-Employment Benefits, OPEB. And what is that? What that is long ago, when you were just 18 years old and you went to work for your government, they made a promise to you. And they said, if you stay here 10 years, 5 years, whatever it is, you can be vested in our health insurance. And then when you retire, we will pay a portion of your health insurance for you. So post-employment is retirement, right? After working. Other is other than pensions. So what you see it in is a lot of the health insurance benefit. So in the old days, in the real old days, it was nowhere to be found, the fact that I have to record that liability. And then there was a statement that said, you made this promise, government, that you're going to pay all this money. It can be millions of dollars. So you have to disclose it in the notes. We're going to talk about that too. You have to disclose it in the notes. And then here comes another standard that says, no, it's not good enough. We want you to book the liability. Now, I will tell you, OPEB is something that you do have control of, because the government may learn this is a very rich promise and we can't afford it anymore. And we just can't afford it anymore. So that's going. Now, what else is coming your way? Just to give you a look into the crystal ball, okay? Leases. So in the old days, if we leased something, there were kind of like two things. Number one, if it met certain criteria, then it was really like we're buying the asset, you know. So now you could book it as a financing transaction, right? And then everything else, like your copy machine, if you lease copy machines or something like that, you're not buying it. You really just want to lease it because the technology is changing so quickly. In 3 or 4 years, you're going to want to like get new ones. And if anybody like people who have been around a while like me, I remember when we used to own copy machines and I couldn't stand owning them. Because now you have to maintain them and do all this other mess where this way you just call the number and tell them to come fix their machine. So those now are, the GASB has considered that those now are liabilities you need to book. Also, cloud computing. A lot of us are doing cloud computing, right? So, and what does that mean? In the old days, I would buy software and I would install it on my server. Sometimes in governments, we wrote our own software. We created it, right? We created our own asset. Now, other times we buy off the shelf and we install it on our server. Cloud computing is when I don't do that. It's basically a portal. So I go log on to a portal, right? And I put in my user ID and password and there's all my accounting software right there. So now there's a concept where that is also, you're gonna have to book a liability for that. That's 96 cloud subscription-based IT service, IT agreements. Okay, so there's a movement to put more things in that economic resources that you talk about. The government-wide is going to get more and more stuff on it because the GASB is made up of all kind of people. Academic people, investor people, people who work in government, it's all kind. And what are we all called? We're called users of the financial statements. And they want, so there are many, many interests in those financial statements. So I may be a manager of a mutual fund, and my mutual fund invests in municipal bonds. Okay, well, I'm going to look at your financial statements. I'm going to watch how you're doing if I'm buying your bonds. You know, so that's one user of a financial statement. You know, there are many, many that use, and so that's why they're interested in this. So that's what we see. Now, look, in the real world, where the rubber meets the road, we're all about fund level at the end of the day. Why? Because of the budget, right? Because of the budget. Because we have this legal obligation to adopt a budget for general fund and special revenue funds. And because of that, we have to prove how we perform budget to actual. And so when I'm buying that building, when the city of Pineville bought that building from the bank, they didn't, in their fund level, maybe a capital projects fund, maybe the general fund, they recorded it as an expenditure, go figure. Let's say they paid $10 million for it, an expenditure, really? Because what we learned in accounting, and what a lot of us who have accounting degrees learn, that's an asset that gets depreciated over a useful life. Okay, that's what's happening at government-wide level. But at fund level, look, we took 40 million or 10 million bucks, we done spent it out of our cash account, right? It's gone. It can't be used for anything else. That's why they call that an expenditure. All right, so I just wanted to talk about that for you, and then also to go back to where Stacy was a little bit on the financial statements, to go here. Okay, so the annual comprehensive financial report, let me start. This is called an audit report. The vast majority of us do audit reports. On our website are all of the audit reports. So you can go look up your agency till the dawn of time. So should you not find like your financial statements in your office only go back to, I don't know, 2015, right? And you want to, like, I remember in places I like going back 20 years because I kind of wanted to see trends and figure stuff out and figure out where we're going. Sometimes, you know, you don't know where you're going till you know where you've been, kind of thing, and understanding stuff. So that's all on our website. These are the basic, this is the basic financial statements that everybody has to have in their audit report. There's another section called Other Supplementary Information, or SI sometimes, just supplementary information. So the required supplementary information is required by the GASB. And it's very few things. It has some pension stuff, information in it, and that budget to actual for the general fund. The budget to actual for the general fund right now can be in one of two places. It can either be in RSI, or it can be up there with your basic financial statements. You can put it up there with government and funded notes, okay? Makes a difference for how much work the auditor does. The auditor is going to do much more work on the government-wide fund and notes than he's going to do on required supplementary. Okay, so required supplementary is required by the GASB. MD&A is required by the GASB. It's required supplementary. So other supplementary, nobody throw tomatoes at me. But I'm saying, the legislative auditor, it's required by someone other than the GASB, like state laws. So there is a state law, and if you've been around government a long time, you remember before the state law happened, where we have to have a schedule of agency head compensation. Okay, that's required by law. That's going to go in other supplementary information. What else is in there? You're going to have those of you who are court systems, oh heavens, anything to do on the court fines and fees and stuff like that, you know the Act 87 Justice System funding schedules. Okay, no tomatoes. I'm glad y'all didn't bring any to throw at me. That's a law that was passed, and I know we're trying to help you with that and trying to get them to be better, but that's also what goes under other supplementary. And there's a new one. So to recap what Stacy said, where do tax collectors, what kind of fund do tax collectors put the money they received in that they have to distribute to other one? What fund type? Fiduciary, you got it. Fiduciary. Okay, so there's a new law that was passed that said for tax collectors, sales tax collectors, they have to disclose basically how much money they collected and the cost of those collections and the distribution. So that's coming out. We're about to post that. It's for if you're a tax collector, there's, I don't know, 67 or something in the state, sales tax collectors. then you have to fill out this schedule, and it's for the fiscal year that would have started January 1 is the first fiscal year. So we're about to post that in the next couple of weeks for you. That goes under other supplementary information. Okay, so this is what's required for you to get a clean opinion on your financial statements. All right, do you have a question in the back?
You mentioned where to go look up prior financial reporting, audit reports. What was that website?
The website, the question was, where can we go get old financial statements and new financial statements, and the parish next to me and the city and all that, it's the Legislative Auditor's website, which on her resource page is lla.la.gov. And Stacy's right, we did, thank you for our kudos, we did recently redo our website, and it's a much more robust search engine there. That's where y'all went to register too for CLGE, you know, on the website. So that's where you can go to get the audit reports. So I know when I worked in government, so I worked in the for-profit world and then I went into government. I had my one class in governmental accounting in college, which plenty colleges are phasing out. And so then I go to work and I'm like, boy, do I have questions. Well, in my government, what I sought to do was find a government that, like, okay, so where she is, let me show you this. This award right here, the Certificate of Achievement for Excellence in Financial Reporting, this is the highest level of financial reporting that you can get in the world, okay, in the world. This program has been around since 1945. 2% of all governments earn this award because, like Stacy said, it's a whole lot of work. And it involves, you have the introductory section and you have the statistical section. It's a big deal to get this award. And what is it about? The very first slide she had about the concept of citizenry and being open to the public, there's a lot about transparency. So there's a lot of things in this, like an org chart. An org chart is basically high level, your decision makers, like your department heads and who they report to and all of that. That's not required in an audit report, but there you go. And now you start naming them. And back here, all of these things, this talks a lot about your capacity to raise revenues, your capacity for debt. So there's a law in Louisiana that you can only have outstanding X% of your for general obligation bonded debt of your property value, basically, that's taxed on property, right? So, but you know what else happens? So at the end of the day, when we issued that debt, the taxpayers pay it back, right? That's the, like, our revenue. The taxpayers pay it back. But so I live in a city, I live in a parish, and I live in a state. How heavily taxed am I? Because I'm paying debt for my city. I might be paying debt to my school board and my drainage district and my hospital service district. I'm paying debt to my parish because of roads and stuff. I'm paying debt to the state, right? So guess what? The debt capacity is, one of the schedules is how heavily taxed your constituents are. Because if they get too heavily taxed, like, they don't like it. They don't like it. And some states are very heavily taxed, and to help us with that. So I just wanted to add that information for you guys to help you kind of see maybe a little bit better. For that, Stacy, what else do you have to add that maybe I missed? We have 15 minutes. All right. I think that's pretty good, so we will leave for lunch early, and we will take a break until 1:20. Okay, so thank you so much for your attention. So we're going to come back. Everybody eat well, get rested up. We'll have cookies here in the afternoon, and then we'll see you back. Thank you so much.